Volatility, back ratio revolution. We're going to do tonight, create maximum returns with minimal risk. Again, my name is Don Kaufman. Welcome. You are watching a TheoTrade presentation. We've always got to throw this up here first, a risk disclosure. We're not financial advisors nor a broker-dealer, and I like to always enunciate that because I spent 15 years of my career on the brokerage side of the business out of Chicago. I'll mention that here in just a moment. Also, copyright disclaimer. This is ours. It is not yours. Listen, if you ever need to get a hold of me after this evening, first and foremost, we are based in none other than Scottsdale, Arizona. Why? That's where a bunch of us actually live now. That's where traders go when they're done with Chicago is Scottsdale. I wish I were joking about that, but really I'm not. There's a ton of market makers, former market makers, hedge funds, all run out of Scottsdale. By the way, if you need to get a hold of me after tonight, just shoot right here. It's support@theotrade.com. We use a common inbox. Just put my name in there. Dawn, you put my name in there, and that email will get to me. And I'm going to tell you right now, I answer emails. I don't care if I get a few hundred emails a day. We answer our emails, okay? Literally thousands of emails every single week. All right, let's get off and rolling. We got all the informalities out of the way. Listen, this is why you're here tonight. Anytime you're going to spend time to join us here at TheoTrade, I want you to always walk away with something very definitive. And tonight, well, let me get to the specifics of what I deem as definitive. And when I say that, I literally mean, we're going to go an hour, probably closer to like an hour and a half tonight. I hope that's all right with everybody. I have a tendency to run over. I've even added some more slides to the deck tonight, and I don't mind spending the extra time. I mean, listen, we're all sequestered to our homes for the most part, so I'll spend as much time as it takes for you guys to understand this. But as I said, if you're going to spend the time here, like, listen, I want you to understand these concepts. Number one, learn where edge lies in the markets, specifically today. This is not, I'm going to show you trades, a ton of trades from the right here, the right now, and more importantly, the strategy to really, relinquish some of that edge, to turn the edge into potential profit. Number two, we're actually going to talk about a strategy with potential for mass returns with rather minimal risks. Number three, discover how you can reduce risk of your portfolio. This, to me, is absolutely critical right now. People just have extraordinary amounts of risk in this business right now. And if there's one thing I'll stress to you tonight, okay, one thing, okay, pay attention when I talk about risk reduction, because we're a day or two away, a bad day or two away, or if you look at like this Thursday, there's $5 trillion of market cap that's going to release earnings all at the exact same time this Thursday. Let's talk about risk reduction a little bit tonight. Number four, determine how one strategy can help you create a high return to risk ratio, even in the most extreme of markets. In fact, extreme is exactly what we're going to be talking about tonight. Number five, the right steps to take whether you're trading or investing. I spend time with discussion for traders. I spend time tonight with discussion for investing. I don't want you to come in here with the assumption that you have to be like a hyperactive trader. This is what you're going to make of it. Those of you that want to trade a little bit more actively, absolutely. But this particular strategy can be extraordinarily hands-off, and it can be used as risk reduction, okay? Risk mitigation for those that are investing. So if you have a 401k, an IRA, you're just downright nervous, pay attention to that part. Again, risk reduction on the investing. One other aspect that I also make apparent right up front, stick with us tonight, okay, until the very end of the webcast. And actually, we're going to give you a free gift, and that free gift is our auto expected move indicator. I feel very, very strongly about the auto expected move indicator. You're going to hear me discuss it all night. One of the things that I'm going to tell you about this indicator, and I'm going to show it to you, not only in just a moment here, I'm going to show it to you. I'm going to show it to you a couple of times. The indicator itself is absolutely a $497 value. You're going to get a huge amount out of this indicator. The reason we provide you the indicator, I don't like to do any loss leaders. We're going to give you the actual indicator, the script for the indicator, And when I say I don't like to do loss leaders, I don't want to show you a strategy that cannot be applied by you because you don't have the indicator. So we're going to provide you that indicator. Again, stay with me right to the end of the webcast, and I will give you, okay, the web address for that. And this auto expected move, it is the single most advanced indicator ever compiled, and it's an indicator that's literally changed the way that we interpret and the way that we view markets. And again, to display that to you, I'll pull it up over here for just a moment. Again, you're going to see me discuss this a number of times this evening. So by all means, don't feel frustrated if you don't completely understand it. What you're looking at, okay, this is where the week starts. This is an upper edge of the expected move, lower edge of the expected move. In moments, you're going to learn what the expected move really is. They're ranges, and they're derived from an options chain. And what this does, it actually tells you what the option markets depict risk to be moving forward. This is not a backward looking indicator. And it actually can tell you about efficiency in a marketplace or lack of efficiency. When I say efficiency, look, when the marketplace moves more than it was anticipated to, okay, there are trades that are available to you. And again, I'm not going to go into any more detail. I want you to know, though, as I reiterate this, you just got to stay with me right to the end of the webcast. We will give you the indicator because I feel strongly that what I'm talking about tonight, is around the indicator. And to do this most effectively, you should probably have it. So with that, let's get down to it. A little housekeeping to kind of start with. Listen, I'm going to go through some pretty complex topics tonight. I hope that's all right with everybody. Listen, if you are here tonight, you're going to spend time with us. I personally feel that we should challenge you to some degree, because if you understood all this stuff, what's the point of you spending, the next 90 minutes with me? So this is a skill set. By the way, again, is that okay for me to say? Because people get offended, I'm going to have to learn something. It's a skill set. What we talk about here is not instant coffee and instant tea. All right. I say, listen, shut the door, turn off Skype, turn off chat, pay attention, right? Close Facebook and all the other garbage on there. Facebook earnings. Hopefully they bomb. Phones on silent mode. Kick out the kids, right? Grandkids, kick them out too. Dog can stay. Listen, you took the time to be here. This stuff's important. Focus on being here. So this is a little bit of background on me. Somebody was like, do you have a camera? No, but I got a picture here. So I watched order flow for 15 years. And some people don't know what order flow is, which I'll explain here momentarily. And that is in very large part of why I'm here. So I'll give you guys a little background on myself, and then we'll just jump into this. But for those of you that are familiar with me, again, my name is Don Kaufman. I grew up around the trading world. I don't think too many people could say that. I had an uncle that was a market maker back in the 1970s, but he wasn't just a market maker. He started making markets. He was extraordinarily successful. And 7 years after he started trading on the Chicago Board Options Exchange, he owned 500 seats on exchanges around the world. So that was by, 1983. He semi-retired in 83. He sold the company to the Swiss bank in 1992. And it was a multi-billion-dollar deal. And again, I grew up just around it. Cousins traded on the floor, and I was interested in it. So 3 weeks out of college in the late 90s, I went to Chicago. By the way, I had no intention of ever trading in my life. I'm just letting people know that. I had absolutely no intention. I don't have a degree in finance. All right. I have a degree in molecular genetics. You want fries with that? By the way, nobody ever heard of molecular genetics until about March of this year. And everybody's like, holy crap, I know what molecular genetics is. So I started trading in the late 90s. And about 3 years after I got started, some guys I knew from the trading floor said, hey, you're young. You don't know any better. Come work with us. And they started a company called Thinkorswim. And I went to work for them. I was actually lucky number 13 in terms of employees there. And I went on to run education for Thinkorswim. I built the entire education division of Thinkorswim. I was on the executive team when we took the company public in 2007. We were acquired by TD Ameritrade in 2010. I went on to actually run education for all of TD Ameritrade from 2010 to 2015, and I managed the education division for over 7 million clients. The biggest portion of that, I got to watch all their order flow. How do you think we built the education? Okay, by watching flow. Watching flow means I had access to everything that you ever did. Ever. By the way, at the time, Thinkorswim and TD Ameritrade had the largest order flow in the entire business. And if you don't know what order flow means, it means your trades. We had access to your trades, and we used big data to study your trades. We studied trades. We know what works, what doesn't. I could actually go into the big data and say, if you're doing, like a covered call, is it working? If you're doing an iron condor, is it working? We knew exactly what strategies, what worked, what didn't. And I got to tell you something, in my own career, that was the most invaluable data I ever had. Listen, I made markets, worked on the floor. None of that was worth anything. Was worth everything was watching the order flow, being able to study the order flow, and really learning what has come from watching billions of dollars and others' mistakes, and the knowledge of what works best, specifically for retail traders, right? Retail traders means you have a TD Ameritrade account, you have a Charles Schwab account, you have a Tastyworks account. Retail traders was my focus, and that's a little background on me. 2015, I did an exit of TD Ameritrade. I had it with FINRA and the SEC, and it's in very large part why I exited, and we built TheoTrade, and that's what kind of brings me to you today. I still do a number of appearances. This is a little bit more of a recent photo. This is actually last summer when I was in Chicago. I'm not allowed to go anywhere anymore, but it's last summer actually out in Chicago, almost about a year ago. That was TD Ameritrade TV. This is actually CNBC. I try to do about one TV hit every single week these days. I try to do a little less CNBC. It's a little less exciting. But this is one of the more memorable ones. It's myself pitted against the man himself, the shark himself, Kevin O'Leary. So with that, listen, we're going through an incredibly difficult time, okay? But one thing I want to reiterate, and before I dive deeply into the education side of this, listen, you have to understand that this chaos that we're seeing, okay, the volatility is good. For those of you that understand this concept, how many of you have ever heard of the VIX? All right? The VIX, right here, right now, is still, compared to like the last 10 years, double what it has been. Like volatility is literally double what it has been over the last 10 years. And one of the problems that I foresee in this business, and again, after 22 years in this business, of which 15 years I spent watching client order flow, I can say this, unquestionably, you're going to be in trouble, when that volatility starts to pick up again. And that's what a lot of people do not recognize about this business, is that volatility is a very, very good thing. Inexperience, though, in volatility could be a little bit more harsh. And that's part of what we're going to explain. By the way, but this theme of volatility is good. Check this out. I grabbed this directly off the TD Ameritrade website. And by the way, the reason I use TD Ameritrade, well, obviously I know their business extraordinarily well. I was talking about this on one of the recent videos too, but this is a number of trades. And just to emphasize to you that volatility is good. And again, volatility right now is double what it has been over the last 10 years. Check this out. TD Ameritrade. And this number just came out last week. They're doing 3.8 million trades a day. Just to point out, last year at this time, they were doing 800,000. And everybody goes, yeah, but commissions went free. Commissions went free right here, right between these months. You can see a little jump over there. Commissions went free. No. That didn't do it. Corona did it. Like literally the onset in March, 3.8 million trades a day. Tell me, that volatility isn't a good thing. You got to understand, you got to harness what is going on right now. When somebody, looks at this and points out, hey, don't worry, TD Ameritrade's doing 3 point. What do you think people are doing? They are active right now, incredibly active in this business. With that, let's get down to it here. Listen, this is your opportunity. It's your time to shine. It's your time to shine, baby. Markets are volatile. Again, volatility is double the average over the last 10 years, and it is. It's just that. It's your time to shine. What I'm going to talk about here, volatility trades. By the way, I'm the monkey. This monkey right here, I know volatility. That's what I was pretty much born into, and that's exactly what we're going to talk about this evening is volatility trading. What do you think that monkey is using? Surface? Or is the monkey using a Surface, or is he on an iPad of some type? I'm going with a Surface. All right. Volatility. Let's start talking about it. Volatility equals risk. Option markets. Well, right off the bat, I said it. I said the O word. So we're not here to emphasize that you have to trade options, but I am here to tell you this. Okay? Without question, listen, got to understand what an option market is today. It's the number of retail clients trading options these days. Like, 10, 15 years ago, you'd mention the word option and people would run. They'd be, oh, hold me. Today, options, okay, this has become absolutely mainstream. And what people don't understand about options, they look at options and they go, look, there's a stock. By the way, in every example I call stock. Okay? There's a stock and the stock is trading at $200. And you have a 200 call, and the 200 call is trading for $2. Okay? And when you look at this 200 call, for those of you that have no idea what an option is, first of all, if you have no idea what an option is, fantastic. You're going to learn a little bit tonight. If you have an idea of what an option is, okay, then sit tight, because you're going to learn some new concepts as well. Because we're not going to look at options the way that you would classically think here this evening. By the way, who here is brand new? Brand new, has never traded an option before in their life. Anybody? Okay. Anybody? Who here is brand new, has never traded an option before and hasn't understood it? You could just type in me. It's okay. Come on, people. Admitting it is the first step this evening. Nobody ever, all right? That's good. So, a couple of people, okay? What I want you to understand, if you're brand new to options, is just some of the bigger concepts, okay? What, only about, there's just shy of like 1,000 people on. I gotta just tell you this. There's just shy of 1,000 people on, and there was like 8 brave people that were like, I don't know anything about options, that said me. It's okay. Nobody else can see the post except me. What am I gonna name you? It was you, man. It was you. I'm gonna out you on live on a webcast here. It was you. It just helps me get a feel for who's into this stuff, who's not. So you have stock trading at 200. What a 200 call is, gives you the right to buy the stock at 200. You have to pay something for it. Why? Because you don't have to go out and buy a $200 stock. You could buy a $200 stock, but what can happen to you with a $200 stock? $200 stock could be worth $100, right? $200 stock can have earnings that could bomb. Obviously, we all recognize the risk in a $200 stock, right? But a 200 call, what's the max risk? $2. $2. That's the most you can lose. What's the most you can make? Well, you have a 200 call. If you have a 200 call and this stock goes, whoa, flying higher. Let's say the stock goes to 210. That's not really flying, but the stock goes from 200 to 210. You have a 200 call. You have the right to buy the stock at 200 because that's what a 200 call does. 200 call gives you the right to buy the stock at 200. Everybody else in the world right now has to pay 210. So what is a 200 call worth when the stock is now trading at 210? Anybody? It's going to be worth at least $10. Okay, but you paid $2 for it up front. So what do you actually make? $8. Now, that seems like a pretty good example. But what happens if the thing goes down? Yada, yada, yada. Listen, there's a lot of different variables. But all I want you to understand right now is this 200 call. And the 200 call costs $2. Now, okay, for those of you that are brand new, you just have a little understanding of what a call is. A call gives you the what? The right to buy the stock. For those of you that are a bit more experienced, this slide's actually really important. Why is a 200 call trading for $2? Okay, so if you're inexperienced, I just want you to understand what a call is. If you're experienced, why is the 200 call trading for $2? Okay, why is it trading for $2? In the end, option pricing comes down to supply and demand. If everybody wants this option, they're like, oh yeah, this is a crazy stock, man. I got to get in on this. This is like Tesla. That ain't going to be trading for $2. It's going to be trading for $10. Right? All of a sudden the price goes up. Why? Because this stock, whatever the stock is Mr. Toad's wild ride. Listen, a high risk stock, okay, equates to higher option pricing. Low risk stuff, like what's low risk? What's low risk these days? There is no low risk, but lower risk equates to lower options pricing, like a $2 option. That option could be $2, that option could be $10, but I want you to understand the reason why. Options are not priced by some crazy Black-Scholes model. People are like, Fisher Black and Myron Scholes won a Nobel Prize. Nobody cares about that. Nobody cares. In the end, it's all down to supply and demand. And option markets, okay, are smart. And that's what people don't get about an option. How many people are aware of this? Options, okay, are good, for instance, for a week. Options are good for a month. Options could even be good for a year. So if options are good, for instance, for 1 month, what is an option 1 month telling you? Okay, what's it really telling you? It's telling you what the marketplace believes risk to be, right? If an option is good for a month, okay, the big question is, what is that option telling you for the month? It's telling you supply and demand. It's telling you the implications of risk for the next month. It's telling you the implications of risk for the next week. It's telling you the implications of risk for the next year. That's what options really do. And that's what people miss about them, okay? So I asked the question, what has volatility been lately in the markets? Like what's risk been? You guys tell me. What do you feel like? And give me a couple of stocks like that you would construe as risky right now. Anybody? Come on, people. We're just getting started. I like it. All right. Apple could be a little bit volatile. I like that one. United Airlines. That's actually a good one. All right. So now we had a few hundred people answer, and I love this because a few hundred people answered, half said Tesla. One person just said Elon Musk. That's killing me. That's absolutely killing me. By the way, gold is not that high of volatility, but gold has been moving a lot. That's actually a great point. I've been trading gold quite a bit. So United Airlines, though, is a great one. You have to love the airline stock. It's like the you're trading literally the bubonic plague itself. Pun intended on that one. Let's get down to it. So what I'm going to do is I'm going to take this volatility now, and I'm going to show you what you can do with it. Like what can you do with it? And I start with a stock, and the volatility is 20%. So right now, if you look at volatility, and the volatility were 20%, like what is that telling you? That's the thing that like people don't get. Like what's the volatility of 20% telling you? Well, that's exactly what I am going to denote here momentarily. Is volatility is actually what we term standard deviation. So I'm just going to take you through the slide and then explain, I'm going to explain a little bit about what it is. So what you're looking at here is you have stock, and stock is trading at 100. I had to make this initially a generic example. So the stock is trading right smack at 100. I don't care if you own it. It doesn't matter if you own it. What I want you to understand is that the volatility right there is set by what? It's set, okay, by the options marketplace. So the volatility is set by the options marketplace. But who actually sets the volatility? Market participants. That's why I went through that. People that are buying and selling set the option prices. So option pricing equates to this 20%. And you know what that really means is this stock can move up $20 or down $20. That's it. People are like thrilled by this idea. Listen, what volatility means, okay, it's an implication, okay, of stock price movement. I'm going to say that again. What volatility means, it's an implication, implied volatility, implication of stock price movement. So for the most part, it says that this stock can go up $20 or down $20, and it's supposed to stay in that range 68% of the time. Now, if you've never seen 68% of the time, I didn't pull that out of thin air. That's what we call one standard deviation, okay? And everything you do in life, everything you do can fit under a deviation curve, right? And I use an example like there's really, really good drivers and there's really, really bad drivers, okay? Good drivers, bad drivers, then there's like LA is somewhere down here. But the most of us fit into the meat of the curve, right? We fit into that 68%. The point that I'm trying to make with this, all right? The point that I'm trying to make with this is that the options market is telling you, hey, this thing's supposed to go up $20 or down 20 bucks? Does that kind of information help you? And the answer is, oh yeah, man, there's a lot I could do with this. But here's the problem with this information. This is good for 1 year. That's good for 1 year. And you're like, thank you, Captain Obvious, but I don't care what the stock does a year from now. I want to know, Don, what that stock does 1 month from now. Good. All we have to do is actually divide a year out. We could divide a year out. We could divide a month out. I can actually divide this all the way down to 1 day. Okay. And that's what we term, okay, and this is a big term. You're going to hear this all night. EM, or what we term expected move. If we know what the option market is, we know how far, okay, we know how far the market can move within a given period of time. I'm going to say that again. If we can look at the option market, you can tell this stock is going to be high risk. This stock is not going to be high risk. Think about the power of that, and think about how few people understand this. I'll give you one other example here. If you look at the VIX, right now, let's say, is trading at 25. I'm just rounding it, right? So the VIX is trading at 25. What do you think the VIX is? It's the S&P 500 volatility index. And if the S&P 500 volatility index says 25, that's a percent. It's always quoted in a percent. That means the S&P 500 is supposed to go up 25% or down 25%. By the way, I told you earlier today, I was going to talk about trading and I was going to talk about investing. If the VIX is at 25, which implies, okay, that there's a 68% chance that this marketplace can go up 25% or down 25%, you should be at home underneath the desk, rocking back and forth, very scared if you have a portfolio. And I don't say that facetiously. A 25 VIX is some serious, serious business, right? And people don't realize, like, yeah, it's the VIX, man. It's the fear index. And yeah, but it means that the marketplace can go up 25% or down 25%. How would you feel right now? I mean, the market's kind of flat on the year, but if the market turned around and went back down 25%, how would you feel about that? You're, I don't feel very special. All right. With that, expected moves. Give me a stock. Give me the options. I can fill you in on how far that stock can move within a given period of time. That's what expected moves do 68% of the time. Okay. The next thing, everybody mentioned Tesla. So imagine that. My, what a large volatility you have, Tesla. Let's actually take you through a couple of expected moves before we go any further. Because what I want you to understand about Tesla is simply this. You're right. Tesla has extraordinarily high implied volatility. But here's what's cool. This is an option for 3 days, for 10 days, for 17 days, for 24 days. Now follow me, follow me, follow me, follow me, follow me, follow me. Boom. See this? 88, and it says what? Plus or minus $111, okay, and 87 cents. Do you know what that is? That is the expected move. And this expected move, how long is it good for? It's good for the next 3 days. Okay. I have to ask a question right now. Time out. How many of you honestly knew what expected move was? Okay. Because this seems to be a concept. And just say yes or no. It's okay. A Y and N, right? How many people here honestly knew what expected move happened to be? Because what we're going to get into tonight, just it's not what it is. I got to explain some of the background on it. Okay. So we're going to get into context of how to actually use this. So few people have actually used this. By the way, one of my, I guess if anybody has a claim to fame, I helped build the expected move calculation. And this platform that you're on right now is Thinkorswim. And this is where I worked. And one of my jobs was not just education, but we built a lot of the calculations. I say we worked with a pretty good team. And a couple of that team actually work here now at TheoTrade. But the implication over here is if you take a look to the right-hand side of the screen, is the marketplace is implying $111 move in the next 3 days. Okay, how can that help you as a trader? You're like, oh, okay, is it going to move $111? Is that a lot? Well, here's what's interesting, and here's what can actually make money and lose money. Right? This is Tesla on a chart. And remember, I talked about this indicator as we started the night off. Right? I talked about the indicator. I said, listen, what this indicator says, it says the little, the darker line, that's where the week starts. The upper line, that's the implication of where we're supposed to go. That's the upper bound. okay, and the lower bound of expected move. Okay, you're supposed to stay in this range 68% of the time. And everybody goes, but Tesla's a wild animal. Okay, but does Tesla really stay in its expected move 68? Look, it stayed in, it stayed in. This one, smashed. Stayed in, smashed. Look at that. That was a wild week, but stayed in. So far this week, stayed in. I just wanted to make a point. If we go back and look at it, you're going to see about 68% of the time it stays in the range. Tesla, okay, the options are smart in here, and the options are actually giving you what the stock should be moving, okay? And this is the expected move. What I'm getting to here is like this over here, this $111 move, that's being applied directly to the chart. But this is not backward-looking garbage. Like it's not backward looking, it's forward looking. This is this week. And I just took the screenshot, today. I'm sorry, we're only till Tuesday. This was this week. So, all right, what's this thing supposed to do the rest of this week? And it'll tell you what it's supposed to do the rest of this week. That's what those lines on the screen happen to be. You're like, oh, this is getting actually interesting. Now, the big question is, what to do? It's kind of, it's fun. It's a real party. You're like, okay, I learned a little bit about expected move. Some of you knew about expected move. How do you use it? Okay, listen. This is what it comes down to. How do you use expected move? There are tons of different ways to use expected move. I mean, you can use expected move to manage risk. You can use it to set stop orders. I mean, a moment ago, we just saw $111 expected move on Tesla. I'm going to tell you, I'm going to give you one right off the bat. You ready? Okay, this one's priceless. If you put your stop order inside the expected move, you're going to get hurt badly. All right. That's the kind of thing that people don't realize about expected move, because most retail traders don't even know what expected move is. Everybody in the professional side uses this. Every one of them. Okay. You don't even have to be an options trader. Everybody uses expected move, because the options marketplace, okay, we assume is smarter than we are. Because why? But millions of people are trading in it. Millions of voices screaming out at the same time. It's probably an efficient marketplace. But again, all this sounds good. Yeah, it sounds good on paper. It's cool, but how do I use it? And how do you use it? Listen, understanding implied volatility, it really is a step in the right direction. Okay, so you understand a little bit about volatility. Volatility, in terms of options, volatility equates to how far the stock can move in a given period of time, yada, yada, yada. How does this stuff actually translate into profits? Boom. You got to take knowledge, okay, from, it's like reading a book, okay, about how to play golf. And then you go, okay, I read a book about how to play golf. You go, so then somebody hands you a club. You go, the hell is this? What is this? Listen, trading, it's a little bit of a sport. You can't read a book about trading. You cannot read a book about trading and come out, you're like, wow, okay, this is wonderful. You have to understand how to translate, okay, what you just saw into profits. And that's exactly what I'm going to do right now. I'm going to actually bring you into a trading concept less than 1% of the market participants are aware exists, okay? Even less figure out, though, how to actually trade the concept. So I'm going to break the concept down a lot easier for tonight, okay? Know your volatility. Listen, there's two types of volatility. There are two types of volatility, and this is not the concept. We're going to get to the concept in a moment. I just need you to understand a little background here again before we go forward. There's two types of volatility that you need to understand. We have what we term implied volatility. That's the options pricing. That's when I was talking about the VIX. The VIX a moment ago is at 25. You know what the VIX is? The VIX, okay, is the S&P 500 vol index. Do you know what the S&P 500 vol index is? It's an options marketplace. The VIX is all about options. But then we have historical volatility. This is important. Historical volatility. What is historical volatility? I love this definition. The standard deviation of past stock price movement. I put the definition in there for all the engineers on board tonight. Engineers, they have to have a manual. Okay, they have to have the definition of it. Am I picking on the engineers a little bit? I am. Okay. By the way, how many engineers do we have watching tonight? There's like 1,000 people in here now, and there's a lot of engineers. Like, I only offended half of you. I was going for the whole bunch, but I only offended half. Okay. Listen, when it comes to historical volatility, what it means is actual stock price movement. What it means is, how much is the market moving? How much is the market moving? All right. I want you to remember just these two concepts: implied volatility. Okay. Implied volatility. What does that mean? It's what the option market depicts risk to be moving forward. Then historical volatility is backwards looking actual stock price movement. You can only see historical volatility after it happens, because that's why it's history. All right. Now, we're going to use this concept to actually find edge. Okay. So first of all, we have to define the edge, find the edge, define the edge. Okay. Find it and then define it. And then we actually have to go in there and actually trade it. So here's what we have. What if the markets continually moved big time? However, options did a poor job of pricing those larger moves in. Now think about that for a second. An option, for example, says that we're supposed to move $2. Okay? But we don't move $2. We move $6. Who's right? Okay? Who's right? Well, I told you, odd things can happen in the market. As I said, 68% of the time. But when I mentioned that 68% of the time under the curve, the first thing you guys should have thought, and a lot of people do, by the way, this is where I'm actually going to give you, some, the engineers get this. You should ask, what happens 16% of the time here and 16% of the time here? Huh? What's going to happen outside that? Well, you're going to find out. Just wait. People always think that. They go, if 68% of the time, what's going to happen the other 32% of the time? Good things. Okay. What I'm getting at over here is we're going to take what we know about volatility. We know about implied volatility. It's what the option market says we're supposed to move. And then we're going to take that and mix it with historical volatility, right? So what I'm saying here is the markets, again, and I was pointing this out a second ago, option markets say that we should move $2 higher or lower. But again, we don't move $2. We move $6. We move $8. We move $10. Okay. Can we actually find this? We can go about finding stocks that are moving more than what the option market's expected. And the answer is enter expected moves. Okay. So when we say enter expected moves over here, auto expected moves can visually display a stock or an ETF smashing through what the option market's expected. I'm going to say that again. Auto expected moves, okay, can visually display a stock or an ETF smashing through what the option market's expected. You know what? Sometimes like reading this doesn't do it justice. Okay. In other words, listen, you can see a stock moving beyond what the option market has priced the movement to be. I like to, I don't want to show you any more words on a screen. I actually want to take you into this. Okay. Because here's exactly what we're saying. This is the IWM. By the way, IWM. Okay. It's the rut. It's the Russell. And what I wanted to show you, this is I highlighted this area right here. It's the Corona crash. I'm highlighting as I'm drawing here. It's the Corona crash. And you can see right there, like there's three lines, all of a sudden it crashes through. And then, what does it do? It crashes through again and crashes through again and crashes through, but then it actually blows through the upside. Okay. The point that I'm making with this is the market. Okay. Look, the market was supposed to stay inside of these three lines. Did it do it this week? Oh no, it just crushed it. Okay. And what you're going to see is the IWM should stay inside the expected move 68.3% of the time. However, in recent weeks, and I'm just covering recent weeks since the Corona crash, the marketplace is smashing through. Okay. Smashing through the expected move, making opportunities. They're massive, just massive opportunities. Look at this. Massive opportunity, huge opportunity. Another one. Okay. Another one to the downside. People, it just keeps going. And that's what's being missed about right now in the marketplace. This marketplace, it's not about bullish. It's not about bearish. It's about, okay, what we term the outlier. Outlier moves, or what I also term volatility limbo. So one of the biggest opportunities that is not being exploited by retail clientele right now are these outlier moves. People just get, right now they just go like, I went out and I bought me an option and I made some money. That's going to work until it doesn't. And I think a lot of people are finding that right now. Like literally it'll work until it does not, right? So let me show you implied volatility opportunities. first of all, if you've had losses, shake off the losses. Just shake them off because I don't want to hear that stuff. Just this is the time, people, okay? This is the time to be able to make money. The volatility is up. And I'm telling you right now, this volatility, it's not going anywhere, okay? This thing's going to get even more serious. Even the next 2 days. Oh, don't worry. Tomorrow, you're like, what's the next 2 days? Tomorrow, we have the Fed. That's okay. Then on Thursday, we have what? Over $5 trillion of market cap, all releasing earnings at the exact same time. It's a freaking party. Oh, and then Friday morning, we have the jobless claims. Can't go wrong over there. There are very few opportunities in this business that present themselves as prevalently as what we're witnessing, okay, with the corona crash, the fallout, okay? And you need to get ready because this is, again, it's not going to abate anytime soon. Every time, like, there's a stimulus bill. Great, there's a trade. There's an election coming up. Great, there's a trade. It's just going to go on and on and on and on. Every time they mention a vaccine, you're like, ooh, it's ridiculous. You are, like, right now, you're immune to the news. You're not immune to the corona. You're immune to news because there's that much garbage coming out. Every one of those is an opportunity. You got to position your portfolio for a big move. Let's get down and dirty. How do you position yourself most effectively for the possibility of extreme movements, yet without exposing yourself to drastic risks? And just please don't get cute, all right? It is serious, and there's a lot of capital up for grabs in here. Let me show you one type of trade, just one type. This is not the full Monty yet that I'm showing you. I got to get you to understand. This is an IWM backspread, okay? Ratio backspread, volatility backspread, all very, very similar animals. And here's just that. So let me show you what this IWM spread looks like. And I picked one here that was it was easy, it was prevalent. It was back in the March timeframe. First of all, this is the first time tonight that I've actually shown you, okay, actual trades. And I want you to get used to looking at this because we're going to look at maybe 30 or 40 more of these trades. This was opened March 23rd. It was closed March 26th. It's the exact time of execution. This is a screenshot taken directly, okay, from Thinkorswim. TOS stands for Think or Swim. It was a screenshot taken directly from Thinkorswim. This is the opening transaction. This is the closing transaction. The expirations involved, the strike prices, okay, for those of you that speak Option Geek. This is what I put the trade on for. This is what I took it off for. Now, okay, all I want you to understand, if you don't understand what a back spread is, fine, dandy, ain't going to make a bit of difference right now because I'm going to show you that a little bit later. What I want you to understand, okay, is the context. The trade itself was actually put on for credit. Now, hold on a second. Just because the trade was put on for credit, don't get ahead of yourself, right? This trade does have risk. There is risk in here. Now, there's a great way to mitigate, to control the risk in here. But why am I showing you this trade? Because it's put on for a 20-cent credit. 3 days later, it was actually taken off, okay, for $6.48 credit. So net, what do I make on it? You're looking close to $6, and we'll call it 65 cents after transaction costs. Okay, $6.65. Now, if you did one in option contracts, trade contracts, right? So one contract, okay, that would be the equivalent of $665. If you did 10 contracts, it's $6,650. If you did 100 contracts, that's a lot. It's $66,500. Listen, I don't trade that big. I like to tell people that I don't trade big. I don't have to trade big. I haven't traded big in many, many years since I made markets. I haven't traded big. Okay. Now, the key to this strategy isn't necessarily the strategy itself. The key to the strategy is understanding the context. Okay. Look at the time the trade was put on. I want you to see this because the trade was actually put on in the middle of a crash. Now, this is, without unequivocation, a bullish strategy. Okay? This is bullish. It's bullish. What does bullish mean? It means I think it's going up. Okay? Did I really think it was going up? I didn't care. I want you to understand something. I put it on for a 20-cent credit. If the marketplace crashed, I'm still going to keep my 20 cents. And if the marketplace bounced, well, I made $6.48. Why did I put the trade on? Well, that's the interesting part. I put the trade on because we had massive breaches of expected move. Look at that. There's the expected move. There's the underlying. So where did I put the trade on? Put the trade on right here on the 23rd. Why? Because we ripped through the expected move. So I figured, either the world's coming to an end and I'll keep the 20 cents, or we'll pop back to the upside. So we pop back to the upside. I made my $6 and change, $6.28, moved on, we're happy. That's it. That's the entire logic of that particular trade. Now, okay, gets better. Every time we actually hit one of the lower bands, okay, or upper bands over here, there are trades that can be put on. In this particular context, I'm going to show you another trade here in a moment, okay? And the next trade I'm going to show you here, I put on because we were at the lower edge of the expected move. I just took a shot at lower edge of the expected move. Here it is. What was the setup for this trade? So this is another one in the IWM. Okay, and here in the IWM, I put this on April 24th, took it on April 29th. By the way, timeout. I'm showing you trades right now that are a couple months old. I will show you trades that are literally up to, okay, and equal to pretty much today. I wanted to start with something that I think has the most prevalent setup. And I thought IWM was the easiest way to kind of easy into this a little bit. All right. So in the IWM here, this is April 24th, April 29th. I put this one on for a 43-cent credit, which means I literally collected $43 up front. Okay, 43 cents, which is the equivalency of 43 bucks up front. Then I turned around and closed it a couple days later, okay, for near 500 bucks. And it was because we bounced to the upside. But if the market, crashed, this is a bullish strategy. If the market crashed, it's okay. I would still keep the 43 cents. How do you lose money in here? We end up in between these, okay? But in a volatile marketplace, you're not going to lose a lot of capital in here. But I want you to know there's risk. By the way, every single trade that I am showing you here today and every single trade that I do at TheoTrade is in front of live clientele of TheoTrade. This one, again, this is actually, look, Jim saying I was out of the IWM at 202, closed IWM yesterday at 438. Judd said closed it for what? Put it on for 43 cents and closed for 213. This is Corky, okay, out for $1.93. Another individual Len out for 228 credit. Listen, different prices, different folks, depending upon how long you actually you held on to it. Well, you guys want to continue? Are we having fun yet? All right. Okay. Here's another one. Here's something I love to trade. Okay. Some people are not familiar with this, but I love it, and that's why I put it in here. This is the TLT. You know what the TLT is? Okay. The easiest way to put it is bonds, bonds, bonds. Okay. Bonds got a little bit wild. And as bonds got a little bit wild, look, they breached to the downside. So what did I do? Okay. And they breached to the upside. What did I do? I caught both moves. Okay. I literally caught both moves on this one. And I'll show you the trades. This is actually coming in. This is getting a little bit more recent. By the way, I'm going to show you very recent trades. This is April 29th, taken off on June 3rd. Here, okay, here we actually opened the trade. This one, okay, is a bearish trade. This one's a bearish trade. This is the first bear trade that I've actually shown tonight. It's a bear trade. I put this one on for a small debit, okay, and then exited it for a credit. And you're like, well, you're not making a ton of money. People, it's bonds. Bonds barely move, and that's what's great. They barely move. But when we put the trade on, okay, look at this thing. They barely move until they absolutely got crushed. I mean, it was great. They were way up here when I put the trade on and they fell through. Okay. And after it got crushed to the downside and I made a little bit of a credit, I don't care, like showing you this. Listen, this is the reality of trade. You want to see like somebody's like, I made X amount of money. No, this is reality. This is what you're really going to make on these spreads. Here, 32-cent debit, closed it for a 98-cent credit, but then caught the opposing side of it. And I wanted you to see it because I literally closed one trade on what? June 3rd. Okay, that was a bearish trade on June 3rd. Then I flipped over, okay, and I flipped over and went into the bullish trade by June 5th. Bullish trade by June 5th. The bullish trade I put on for a 25-cent credit, closed it for a $2.10 credit. All of the stuff that I'm talking about right now is predicated on these expected moves. Okay, this one is not the trade itself is fairly easy to interpret once you understand, okay, the option side of the business. And again, this is where you want to be right now. It's about outlier trades, right? This is it, because what? The future it's bright and it is full of risks. Listen, I am not suggesting that I can time wild moves. Nobody can see the wild moves. I can't time an outlier, okay? All I can do is put the right trade on, not even at the right time. I could just put the right trade on. And you know what? Look at this. If the trade, listen, if the trade works for me, I'm going to make some decent money. But if the trade like totally falls apart, I still get to keep 25 cents. Like, why aren't people doing more of these? Why aren't more people talking about like ratio back spreads right now? You know, I've known about ratio back spreads almost since the day I got involved in this business. But you don't want to know the reality? Okay. They haven't worked as well until a couple of months ago. And they are right now, they are hot. They are absolutely on it. Listen, you could be 2 trades away from this. And this is where I'm trying to bring you. Now, this is going to get a little bit wild, so ease up on me here. Okay. This is a little bit more of an in-depth slide. Now, this is for people that do understand a little bit more about options. If you don't understand options, I want you to understand this. This is a risk graph that I shot today. Okay, that's today's date. That's when I actually shot this today. And the risk graph basically says this. The IWM, which again, okay, is the Russell, right? So it's the Russell. If the Russell stays in a very, very tight range, I'm actually going to, okay, lose a small amount of money if it stays in a tight range. If it takes off higher, I make a ton of money. If it takes off downside, I make money. And I want you to understand, you're looking at the profit. Everybody always looks at the profit and loss graph, right? So they look at the P&L. Everybody looks at the P&L. You're like, I can make $1,000 if we go here, or I can make about $1,000 if we go here. That's not that much. It's 2 contracts. Look, I'm like running around my house in a cape over here. Captain 2 lot strikes again. If you want to make more money, just do more contracts. I could have come in here and put 20 contracts. I could have come in here and put 100 contracts, but that crap ain't real. This is real. When was the last time that you could trade two contracts and make that kind of P&L? It irritates me because people put so much freaking risk on the table. Okay? And what you need to understand about this trade, there are 2 separate trades in here. There is a trade for the upside and there's a trade for the downside. This, okay, is what we term, and I'm going to bring this up later, it's what we term the infinity spread. Infinity spread, right? And we term it an infinity spread, well, for the most part, because it's infinite. It's infinite because it's got, shot to the upside, shot to the downside. The infinity spread, though, we've been trading these for years. I've actually been trading it now for over a decade, and I'll actually show you some of the trades that I've done over the last decade in here. What I want you to see about this infinity spread, here's one in IWM, okay? This is the upside is an IWM, and it's put on for a 21-cent credit. I priced this today. That's a September back spread. I priced it today. And at the same time, I also priced a trade in the VIX. And the VIX actually gave us our downside shot. And the VIX trade is put on for nothing. So you have one trade that's put on for a 21-cent credit, another trade that's put on for nothing. Don't let this stuff get you confused right now, okay? Sit tight. Sit tight because I'm going to show you a bit more. Is everybody okay at this point? So we're an hour in, and I've got a lot more, okay? We're going to rip through quite a number of slides here, but I've got a lot more. And I want you, okay, I want you to know exactly, all right, where we're at. And it's important that the infinity spread, again, is no big song and dance like you're seeing in the profit and loss graph. It can take some losses, but the losses, like, who cares? So what? You take a couple of losses in here, right? You take a couple of losses next month, take a couple of losses next month. Sooner or later, you're going to rock to the upside or rock to the downside. That's the whole idea of the infinity spread. I don't want to sugarcoat anything here. There's no sugarcoating this. Sooner or later, you're going to rock to the upside, you're going to rock to the downside. Let me actually show you how it works, okay? And to explain this, okay, I'm going to show you my trades. Now, these types of spreads, okay, most of the time, these types of spreads, they only pay off periodically, but when they do pay off, they pay off what? Huge. I want you guys to understand this. Most of the time, the trade that I just showed you, okay, a moment ago, most of the time, this trade only pays off what? Periodically. In the last few months since the Corona crash, okay, I have had more infinity spreads, not only price well, but pay off, okay, than ever before in my career of trading. I will literally show you the P&L. I'll show you everything. By the way, I love this because I can finally show people like the full Monty here. If you're unaware, again, I came from the brokerage business, and up until the point of 2015, okay, when you work as a broker dealer, you cannot share your trades. Now I'm going to share everything with you. So allow me to display a number of key events surrounding the last few years, okay, because I want to show you the history of this particular trade so that you have, some bearing of when it pays out. So this is the last couple of years. Markets and volatility did not effectively price risk. Thereafter, I'm actually going to display current trades, like trades in the here and now, and the strategies obviously I used, because I want you to see that in the last couple of years, it only paid off a couple of times. Right now, it's raining. All right, it's literally raining on these spreads, and that's good. So the first one I'll actually show you. This is the Chinese Yuan devaluation of August of 2015. So here's my first big event when I was outside the brokerage industry, and I was more than happy to display this. But volatility tripled in 3 days. Now, how many people remember this? Seriously, how many people remember this? Because the infinity spread was paid off huge over here. Okay, by the way, an infinity spread is not the same. It is not the same as a back ratio spread. I am absolutely reading the chat right now. Okay, so here's the Chinese Yuan devaluation. This is actually my account over and this is Thinkorswim. So again, listen, I grew up on Thinkorswim. I built a lot of the tech in here, so I still know it really, really well. I do use other trading applications as well now, but I want to show you, and you have to look a little carefully here. That is August 24th to August 25th. This is exactly, okay, a 24-hour period, and the P&L, if you bring it right down here, in a 24-hour period, I made $17,399.60. Okay, and by the way, at the time, I didn't have a ton of positions on. Okay, I didn't have a ton of positions on, but I made 17 grand in a period of 24 hours around the Yuan devaluation. That was a type of infinity spread. The next one I'm going to show you, it's the taper tantrum. So what's fun about this, though, is I had to go from 2015 to 2016 because I literally had to jump forward a year because these spreads were not paying out a huge amount in the past. So here's 2016. By the way, 2016 was actually a pretty good year. 2016 was crazy, right? Volatility doubled, but it took, listen, this is the beginning of the year. It took some time for that volatility to double, and then everything run away, volatility, run away. So here's actually a couple of different trades in here. So I figured I'd display it this way. So you're looking at my account. Again, you see the exact account number. I blank out the middle of the account number, but the last, 8670 is the account number. This is from January of 2016, January 1st, 2016 to the end of February, leap day. And in that particular time frame, I could see every position I had on. I made $103,780 and change. So I made 100 grand inside of a 2-month period of time. Now, at the time, people always ask, well, how big was the account? In this account, at this particular time, okay, I was keeping, I think I had about $250,000 in the account coming into this one. And I can go back and I can actually look at that. All right, the next one was also 2016. By the way, 2016, this is the taper tantrum. That was fun, okay? Next one came into Brexit. Brexit was like a flash in the pan. Like Brexit, boom, and then right back up. Like, it's okay, just kidding. Brexit, though, was actually a really good 24-hour period for me. So here's actually Brexit. That is, again, a 24-hour period. It's the 23rd to the 24th of 2016. The P&L, I know it's small. Look, there's a crap load of positions in here. The P&L is $25,000, okay, $201.13 in a 24-hour period. That ain't bad for a 24-hour period. The next one up is the presidential election. The presidential election here, okay, here, I'm actually going to show you individual trades. The market, the night of the presidential election, started to tank. It started to tank that evening, and volatility was spiking up. But the reason I decided to actually show you the actual trades here, because you're going to recognize them. Okay, these are types of ratio spreads, and these particular ratio spreads, I want you to see, because these are interesting trades here. Most people don't realize you could do this. They were put on. What? Look at the date. Okay, they were put on the night of the election, and they were put on during the night of the election, and they were done on options and futures. Not everybody understands options and futures. That's okay. But I want you to know that you could trade middle of the night, which is exactly what I did. It wasn't the middle of the night. It was like what? Okay. Oh, 8 o'clock. That's 8:23 my time. And I put this one on for a $2.60 credit. Took it off for a $19 credit. The same thing is true right here. I actually put this one on, and this is an infinity spread. Okay. Put it on for a 70-cent credit. Closed it for a $30 credit. Okay. These trades were on. This one was on for a whopping 48 hours. This one, okay, was only on to what? The next morning. The market had bounced back up that fast. Okay. Everything you're seeing right now is opportunity. I wanted to show you the presidential elections because guess what? They're coming around the corner. And the presidential elections, I didn't put this trade on before the election. I put this trade on smack dab. Okay. The numbers were coming in. I'm like, oh, this is going to be awesome. The market went limit down. I actually put on a bullish strategy. Why did I put on a bullish strategy? I don't know. Okay. I figured if the market's going to continue to crash, who cares? I'll keep my 265. But if the market bounces back up, I'll make 20 bucks. And that's exactly what I did. These were huge. Do you realize, like, you put a trade on for a 70-cent credit, you closed it, okay, what, 2 days later for a $30 credit? That's huge by huge. Okay, P&L wise, that is a monster. Now, we fast forward to the January, February volatility event. Okay, you know what's fun about this one? Everybody already forgets that this even happened. This, okay, the market was just rallying, just absolutely tanked. Okay, this is actually what they call the VIX explosion. Volatility was at 12%. It was one of the largest volatility moves. Now, here, okay, here is the first time that we actually really started to call it, okay, the infinity spread. So this is the first time that we actually named the strategy, like definitively the infinity spread. And this is a trade that I actually put on for a $1.37 debit. I want you to show you the entire trade. It's in the spiders. I put it on for a $1.37 debit. I closed it for a $10.58 credit. Now, some people are not familiar with what that amounts to. Basically, I had $137 I put into it and closed it for $1,058. That's if you did one contract. If you did 10 contracts, $1,370 at risk to be able to make $10,580 at risk. Okay, this was a monstrous, like percentage-wise, these are monstrous trades. It's all about what? Knocking the cover off the ball. By the way, in 2018, it didn't stop there. In 2018, Fed-fueled selling. Okay, this is actually when everybody freaked out that interest rates was going up. So here we go. Same exact trade. It's literally the same trade. People say, when do you put these trades on? I got news for you. I always have the trade on. I always have an infinity spread. I have one on right now. Okay. Right now has been the most prevalent time ever in the history of these types of trades. You got to understand something about a trade like this. Okay. When you can risk $1 and make 6, you don't have to have, but what? 1 or 2 of these hit in an entire year. What's going to happen to you? Like, oh, I lost $1. Good. So what? You lost $1. And you lost another $1. And you lost another $1. And you lost another $1. Oh, hits it out of the park, $6.50. Oh, another one for $10. You don't have to hit a lot of them, okay? This is like the mother of all trades. Now, okay, the next I'm going to show you, I worked in the brokerage business from 2001 until 2015. And at that time in the brokerage world, I cannot show account statements from that period of time, but I also had a very similar trade on. This is before I called it. An infinity trade. I had a derivative of this trade on. This is what I call the financial crisis trade. By the way, at the time, so this is going back. I bought the house in 2010, and the way I'm explaining the trade is I'm kind of backing you into this. In 2008, okay, my trading hit it out of the park. It's not exactly like a warm and fuzzy thing to talk about in this business. Like nobody likes to hear, everybody knows that people made money in 2008. A lot of people got crushed. Okay. So in 2008, I hit, okay, a number of these types of crisis seeking trades. And with the capital out there, I don't mind telling people this, By the way, at the time, I was the ripe old age of, well, it's exactly 10 years ago, so I was a ripe old age of 34 years old. And I actually bought a home in Scottsdale, Arizona. And that home I paid 1.3 million for, and I call this the financial crisis trade. I actually bought the house in July of 2010, which is pretty close to the bottom. I'm a trader. I waited. The house is now worth, over $2.8 million now. So should I rent it out? There's no way I would rent this house out for $8,000 a month. I wouldn't even rent it out for $20,000 a month. It's way too nice. I just redid the house. By the way, if you're curious what a $2.8 million home looks like inside, people always ask, like, do you really own I own the house, okay? Believe me, I'm repainting the house right now, and it's a pain. I'm not in that house right now. I am in our Payson, Arizona home. This one's in Scottsdale, but if you want to know what a $2.8 million house looks like, believe me, it didn't look like this when we first bought it. There was quite a bit of work put into it, but yeah, it's the backyard. By the way, a pool like this looks really good until you're, you have a kid go over the edge, and there is the infamous indoor basketball court. The rumors, okay, are highly overrated. No, the indoor basketball court, my kids absolutely love it, but I destroyed the indoor basketball court about 3 weeks ago. I'll explain that a little bit later. And there's a movie theater. Everybody has to have a movie theater in their house. With that, infinity spreads. Listen, the opportunities are now. The trade, okay, is exactly this. It's two trades, okay? It is two trades broken down. One of them is going to be a bullish trade, and one of them is going to be a bearish trade. The trades, obviously, that hit during the financial crisis were bearish trades. They were actually bearish trades that were specifically placed in the SPX, is where I actually made a tremendous amount at that particular time. And pulling off a trade to that extent, okay, had nothing to do with timing, and it had nothing to do with my ability as a trader. And I want you guys to understand that I always put what I term crisis seeking trades on. Okay, that is what the extreme is about. I don't know. I didn't know that the world was going to fall apart in March, but I did well. In fact, here's exactly what I did in that time frame. What you're looking at here are 5-day net liquidating values. Okay, this is actually a screenshot. Again, it's 5-day net liq value. This is a screenshot taken from February. It's the week of February 23rd. If you've never seen this before, again, this is the Thinkorswim platform. It's done in reverse, but here's the 23rd, the 24th, the 25th, and you can actually see the incremental gains inside of the account. Okay, up until, of course, when I took the screenshot was the 27th. So I took the account from $211,000 to $248,000 inside of a week. Then I decided to take a snapshot almost exactly another month out. So about a month out, okay, I took another screenshot, and we went from $248,000. By then, the account is actually worth $305,000. Now, time out for a second. This account that I'm showing you is an IRA. This isn't like a special margin account. This is actually my IRA. So the account then in early March went from $305,000 this week. It wasn't a stellar week. I went to $308 by the end of the week. Now, okay, I took the screenshot today. Listen, every day is not a good day. The account was at 392. What's that's a Friday, a Saturday, a Sunday. Here's a Monday. Apparently on Monday I didn't do so well. It was down about $3,000 and then pulled it back up. But in this time frame, okay, even when volatility started to drop a little bit, but even from March, okay, until literally July, okay, I tacked on another $80,000 to the account. I'm telling you, the crash was phenomenal. But what's going on, even from late March until right now, is some good trade. There's some really good trade. And I'll actually show you now a couple of the trades. By the way, over the life of the trade, this is actually an infinity put spread. This one is actually done in the TLT, 12-cent debit, closed it for a 350 credit. This is actually what our clientele are saying. This is the second time I've actually been to Don's service. It took a while to sink in, but in-out spreads, saving my beep. And now everywhere, okay, when they fit also using risk twist spreads, trade on both of my accounts. The risk twist is part of the infinity spread. It's embarrassing to think the tens of thousands of dollars I spent on option info and classes. Don's class is the greatest from Gary M. This one's from Vicky W. I closed the TLT risk twist spread. It's an RTS for 127% gain. Price was moving so fast, I ended up using a market order. pretty excited to see what the whole RTS trade cycle is about. Next one on the docket. Okay, I just want to show you a little history on here because these things have been paying off for quite some time. This is actually the SPY. This one's put on for a 3-cent credit, closed for a $3 credit. I'll jump right to the next one. Here's actually a VIX volatility spread. The VIX volatility spread, VIX vol spread, is the VIX out of the trade. Here's actually coming into the Corona crash. I put the trade on for nothing, closed it for a $3.75 credit. Now you can sit here and try to work out like percentage gains and so forth. Put it on for nothing. Okay, up front, closed it for a $3.75 credit. This one, if the trade has risk, but I just want you to understand, like in context, okay, this is the kind of stuff that you need to learn in this marketplace. The next one, here's a fun one. I just threw this one in here because it's kind of a fun one. This one's done on Tesla. This is actually infinity call spread done on Tesla. I put this one on in November of 2019, and I actually got out of it in December of 2019. I didn't know nothing in this trade. Look, Tesla was actually trading at 300. Put it on for a 20-cent debit. Closed it for an $11 credit. $11. By the way, after I put this trade on, okay, and took it off, the other co-founder of TheoTrade, he goes, "You got to buy a Tesla." So I did. It's my Tesla. Putting the account in ludicrous mode. I actually meant to say it's not my Tesla. That belongs to me. The kid belongs to me. I bought the Tesla because of the Tesla position. I haven't traded Tesla all that much since then. The volatility got out of control, but it was so advantageous, okay, back then. Right now, what's advantageous is stuff like the QQQ, stuff like IWM. I'm telling you, this is where you want to be. By the way, I'm just going to say this, and if you've never experienced a Tesla, you got to go. You got to go get one right now, okay? They're ridiculous, absolutely ridiculous. I can't say enough good things about that car, and I am not an Elon Musk fanboy, I promise. To continue, this is a SPY risk twist spread, okay? And here in the spiders, this is also coming into the Corona crash. Every $180 I invested, I got back $1,053. It's a 485% return. What I wanted to show you, okay, is you saw my account incrementally gained some steam, and it really kicked into high gear late February. This was actually the spread that did it. So if there's one particular spread that really started to kick things into high gear coming into the Corona crash, remember, I closed this trade in late February. This wasn't even into the crash, but I paid $1.80 and made $10 out of it. Okay, let me tell you something. You don't have to hit a whole lot of those in your trading career to make this stuff worthwhile. Okay, the next trade in here, this is an XLF risk twist. Again, I want to reiterate something. I didn't know on December 20th, and the reason I put this trade in here, I know this trade's old. I'm going to bring really recent trades into focus in a second. I didn't know what a Corona was, okay, back December 20th. Neither did you. Nobody heard about this till a few days after Christmas, right? But I put the trade on. Somebody goes, "Why did you put that trade on then? How did you know?" I didn't know anything. As I told you, I always have one on. Always. Closed it on February, 27th. $36 invested, I got back $135. You realize if you did $360, you got back what? $1,350. It's 275% return. Okay. From here, by the way, I'm going to let you guys know something. From here, this is where I started to realize like this is going to get serious. Okay. And then I really started to load the boat. This is a point in time where like late February, I did totally go for it. And I started putting on a crap load of risk at this point. And I don't listen, this is an experienced trader, right? I didn't know anything with the spider trade. I didn't know anything with the XLF trade. By this time, I had a pretty good idea that we could crash. I paid 53 cents. I closed this one for $3.62. Every $53 I invested, I got back $362. It's a 583% return. Okay. Now it gets really serious. This is like the mother of all trades. Again, this is where I started to assume things were going to go a little hostile. And here's actually the XLU. If you're unfamiliar with the XLU, it's utilities. No one ever expected utilities to even move. Every $96 I invested, I got back $1,272. By the way, that's real. $96 into $1,200. If you did 10 contracts, that's $900 $160 into 12,720. And you're asking, like, how in the hell did he jump $150,000 in a month period? I had risk twists on. I didn't do a lot of size either. Okay, I had some of these on 10, 12 contracts. That's it. I didn't have any 100 contracts. I can't stand when people are like, I made $1 million in a trade. You make $1 million, you probably lose $1 million, right? I had 96 bucks at risk in here, but if I did 10 contracts, I had just under $1,000 of risk. And in this one, I actually did have very close to 10 contracts. In fact, this particular spread, I know I had 12 contracts. Here's another one. This is actually the EEM. Okay, I'm jumping forward a little bit in time. I said I want to get a little bit more recent. This is the EEM. So again, you have to understand, put this on in places that, everybody expects Tesla to move, so it doesn't pay off that well anymore. Nobody expects emerging markets to do anything. 18-cent credit, close it for $1. People look at this, they go, oh man, that $10 trade looked better. 18 cents into $1. It's only a $37 underlying. This is not a high-flying Tesla, okay? This is a huge return in a very minimal product, and that's important, okay? You don't have to have a huge amount of money. I'm showing you, like, this trade, this thing will tie up, okay, $150. $150 if you do one contract. Anybody with a $2,000 account could do this trade. You have to have $2,000 in your account. Every trade I'm showing you here is done in an IRA. This is my retirement account, okay? So this one's a little bit more recent. Here is the XLF back spread. XLF back spread. This one's actually from May. Here is put on for nothing, taken off for a 51-cent credit. Okay? Do it again. Here's actually another XLF back spread. Why the XLF? It's the financials. I like the financials. Put on June 1st, taken off June 3rd. 25-cent credit, 26-cent credit, right? And you're looking at this, you're like, that's not as good as the $10. The XLF is a $22 product. And we're making 50 cents off of a $22 product. You can't go wrong. By the way, all these trades, again, I reiterate, they're all put on in front of clients. So John here made 570%. Perry XLF back ratio was a nice winner. Wilhelm, hey, new here. XLF and Baidu back ratios. I did both of these. Batting 1,000. Okay, close my XLF. Thanks, Dom. Randall got out of XLF. This guy got out at 204. He smoked my price. He just absolutely smoked my price. I just want to show you this. Okay, I got out for a 26-cent credit. This gentleman actually held for 204. Next one up on the docket. This one is the XLE. And again, never before in history have we hit this many back spreads this quickly. Look at the returns over here. 5-cent debit for $1.35. Okay, it is raining back spreads right now. Here's another one in TLT. Whoever dreamed you can make money in bonds with back spreads? June 5th out June 11th. Okay, I'm just showing you trades from last month because most of the trades from July, they're not closed yet, but the day is young, right? 25-cent credit out for a $2.10 credit. Next one on the docket. This is Roku. Oh, I wanted to show you Roku. I want to show you Roku because this one is technically, this is a losing trade. This is technically a losing trade. Look, I put it on June 19th, and it is a bearish trade. So June 19th, and I closed it July 10th, which is, 3 weeks ago. I put it on for a $2.05 credit, but then I had to pay 38 cents to get it back. And you're like, what? Well, so what does that mean? Okay, what does it mean? I still made money. I still absolutely made money in here. What did I make? Oh, close to about $1.60. I'm just rounding. I made about $1.60 in the trade. I did make money, but I was wrong. Okay, stock never moved down. In fact, I even threw in the Roku chart here. So I wanted to show you, I put this trade on back in this time frame here, and the stock kind of migrated obviously to the upside. So after I put it on, I'm bearish. Okay, we didn't go bearish, we went bullish, but it didn't make a difference because as I told you a little bit earlier, okay, you could be dead wrong. This is bearish. I needed it to go down. It didn't go down, it went up. Again, put on in June 19th, closed again July 10th. So June 19th, by the way, to be really, really specific in here. Okay, this is where I kind of put on the bearish trade. We didn't go down. We threatened to go down, and then we actually took off to the upside, and I got to keep the credit. I got to keep most of the credit. The honest truth is you don't get to keep the full $2. It's $2 minus the 38 cents you had to pay to get out of the trade. So I paid the money. I'm out, but I still made $1.60 on a trade that I was wrong. Okay, that's huge. Here's a Microsoft back spread. Microsoft, now we're getting, and again, very, very recent, some trades. The Microsoft, June 3rd, closed what? June 23rd, 76-cent credit, okay? 540, right? By the way, the Microsoft that was a big hit with a lot of clients. Listen, I sold Microsoft back ratio for 550. Omar filled it at 587. Okay, wiggled out of this one, the $200 to $300 range. By the way, people were asking like, what did I do with the capital of this one? This is the kids are distraught right now. We turned the basketball court into a gym. This is my coronavirus trade right now. By the way, there's not one specific trade that I can point the finger at, but I had quite the little corona crash trade. This is our house again in Scottsdale, and I destroyed their basketball court. I apologize. The floors are not done yet, and everything's been painted in here. The painters were getting ready to paint when I took that shot. But yeah, we built a gym. I literally bought a gym in Gilbert, Arizona that went out of business. I bought every single piece of equipment, and I had them deliver it into the basketball court. So there's only a couple gyms in the world in a private collection that are larger than this. This one, I want a good trade. Okay, everything you see in here. This is actually one of the greatest trades ever. Everything you see in here is only a couple $1,000s. It was an incredible trade for you. So everything's opportunistic. Listen, what our members are saying, Captain David. Okay, I'm out of the SPY, plus 78%, very good. And a plus day on the S&Ps. Thank you, Corey and Don. Ali said, made good money in the QQQ, went to 354. Okay, we got in at 354, got out at 858. Ali also said, help me pay for a 1-year TheoTrade subscription with the QQQ. Jamie G, happy 4th. Okay, $190 profit on the SPY put. Okay, this is back in June. Out for 752. Diamond, you're amazing. Anytime anybody puts in there, I had to put in there. Pablo, thanks. Nice profits. Have a good weekend, everybody. Listen, this is not going to take a huge amount of time. The infinity spread can be used for investing, or it can be used for trading, and that's your distinction, whether you want to be a little bit more active or not. But I don't want you guys to think that you have to be glued to the screen all day, all night. Every single trade that I'm showing you here today was displayed live at TheoTrade. Okay, we even text message and use what they call push notification. Okay, so as long as you have a phone, we actually text these trades out to you. The infinity spread is completely hands off. It even uses set it and forget it order types, which are what we call good till canceled. Fraction of your time. Okay, literally a fraction of the time is enough to see some results with infinity spreads. They're on all the time. I have them on right now. I have this VIX IWM trade on right now. Listen, this is characteristics of the infinity spread. It increases in value when exposed to heavy volatility, right? Markets get crazy, it's going to make money. Increases in value when markets sell off or rally huge. You need huge movement. Significant profit potential in a downside move, huge profit potential in an upside move. Loses minimal capital. You can lose money in this. Okay, if we drift, remain flat, you're going to lose a little bit. But as I said, you lose $1, you lose $1, you lose $1, you make 10. It works out. It's about putting the trade on sequentially. It need only be placed a few times a year. You have to look. This fixed trade, this one's out in September. It's a perfect spread to produce risk of a stock portfolio. Think about this. Okay, if you can make $10 if the market crashes, it's going to offset the risk of your 401k. Okay, that to me is one of the most important concepts. I don't want to overlook it. If it's the perfect spread to reduce stock portfolio risk, that's why you should use it. Now, some people are here like, I want to risk $1 to be able to make 10. Listen, I totally get that. Okay, looking for big, home runs in the marketplace, what this business is about. Totally get it. But I'm also concerned about everybody's stock portfolio, because when it comes to stock portfolios, listen, the wealth, okay, of this entire country be wiped out in one day with a wild crash. Okay, nobody believed that because we just rallied back up from the corona crash, right? March, we were like out of the contest. By April, you're like, I'm back in this. I'm back in this one, baby. Okay, listen, this is not going to be a smooth sail out in front of us, right? The Fed would not have thrown $3 trillion almost overnight into markets if everything is going to be smooth sailing from here. Okay, listen. It's an excellent tool for seeking large returns, okay, on a big market event. Excellent. And you need that in a marketplace like this. Now, you got to actually build this thing. And I get it. I totally get it. People look at this the first time, they go, yes, it's interesting, but it looks like a little bit of a beast. Listen, do not let these options intimidate you. I don't want to hear it. Okay? Do not let them intimidate you. You got to give me a couple of hours. We can teach you everything there is. This is not that bad of a spread. Okay? Literally, you got to understand these spreads below. This one's being done for a 21-cent credit, right? And there's two trades in here, and they're being done for a 21-cent credit. Everybody goes, what about commissions? Commissions are what? Minimal these days. They're like nothing. But this spread, okay, this is an absolutely massive chainsaw. And there's an analogy that I've used and used for years, and I'll always use this analogy to the marketplace, but a trade like the infinity spread, okay, trade like the infinity spread, this is, okay, a monstrous chainsaw out there. And I use that analogy because if you wanted to go out and you wanted to cut down a tree, I live right now in the forest. I'm actually up in Payson, Arizona, literally in the forest. There's gigantic pine trees here, you know, and these pine trees, you can cut it down probably with some handsaw. If you cut one of these trees down with a handsaw, it would probably take you legitimately a day or two to cut, you know, with a handsaw. Did it with a chainsaw, it's going to be quick, it's going to be fast. But if you don't know how to use the chainsaw, you will kill yourself. Okay? Options, the exact same thing. Right? Options are going to be the quickest, the fastest, the safest, the easiest way to get where you want to go in the marketplace. But this trade specifically, this is the chainsaw. And if you do not know how to use this trade correctly, okay, you are going to chop off more than a few fingers. Okay? You got to learn to use this thing correctly. And I don't mean to scare you. I mean just you have to understand step by step why we get into the trade, how we get into the trade. What's important about this trade isn't what you see here. Who cares? Any one of you could copy this trade. That's not going to tell you how to make money off of it. Okay? Listen, this is what you need to know to successfully create infinite possible turns with minimal risks. This is what you need to know to create the infinity spread. First, you got to know when and where do you place your infinity spread trades. When I say when and where, like think about that. Like when and where? How did I know? Okay? I didn't know. I didn't know anything back in December of 2019. I always put them on. Okay? By the way, then I actually had an idea that it could happen, but when and where? Like, right? That's one of the first questions you have to be able to answer. Next, how often should I place these positions? And do they have to be continually monitored? I'll tell you right now, they do not have to be monitored. Use good till canceled orders. How do I set up the trades? And what's the correct market volatility to place trades within? See, that's one of the most critical steps, okay, of this. So I can't stress this enough, right? One of the most critical steps is what's the correct volatility to do this in? What is the correct volatility to actually place these trades within? Get that wrong. That's why I said Tesla, it's out. Tesla you can't do. Just because you think Tesla moves a lot, no. Everybody knows Tesla moves, so it's out. All right. That's why you saw stuff like EEM. That's why you saw stuff like bonds. Nobody expects bonds to make a wild move. Nobody expected EEM to make a wild move. How about we could actually tell you the precise volatility, okay, and when you should place these. Do we need a large amount of capital in my account? No. You need $2,000 in your account, okay, and you could do it in an IRA, okay. What underlyings, what stocks, indices make the best candidates? This is a key component. As I said a moment ago, like, you know, why did I do the EEM? Why the TLT? What volatilities do I have on? Okay. When do I, to get in? How do I know to get in? All right. And then more importantly, when am I going to get out? What are the percentage returns supposed to be? You know, somebody was in the chat room a second ago. They're like, well, what's the probability of you making money on this? Probability of making money on the trade, okay, is actually relatively high. The key, though, is the percentage returns in the trade. The percentage returns are very, very definitive. And it's what we have to actually term, and you will learn, okay, it's what we call the okay, it's the probability of profitability. For example, what's the probability of you making 100% on your money? None of those trades did I make 100%. I made more than 100% in every single trade, but that's the right question to ask, right? Can I do this in an IRA or retirement account? I've already covered that about 5 times, and the answer is absolutely. Every single trade that I showed you tonight was actually done in my retirement account. How do I size the trades for my account? You know what? Some of you are going to come to us with a $2,000 account. Some are going to come with a $10,000 account. Some, okay, are going to come with north of $1 million. And I can't stress to you enough. Size, okay, It is everything. Size is everything. You size these trades wrong, what's the point? If you're going to try to reduce risk of your portfolio, if you have a $100,000 401k, you better know exactly how many contracts to use, and that's the kind of stuff that we tell you, okay? What's the right amount of risk for you? All right? Well, actually, forget about how much capital that you have in your account. I don't care, okay? Seriously. Let's, like what? I don't care if you have $1 million in your account. So do I. That's great. What's the right amount of risk? Okay. Are you willing to actually lose $1,000? Are you willing to lose $600? You want to lose like $50? You got to tell me, because we can actually tell you then what product to use, what volatility you should use, the right amount of risk. How do I actually go about building this trade? Some people are like, I think I could probably figure that out. Yeah, but others don't. You actually build these things. You got to take in context. Like, you can't read this crap in a book and be just like, oh, I'm going to build it. Okay. Somebody's got to take you through this. Listen, let me show you precisely what we do here at TheoTrade. We create recipes in trading. And when I say recipes, I mean just that. When I'm talking about what volatility, what stocks, when do I get in, when do I get out, what probability of profitability be, okay? The right returns for this. Do I do it in an IRA? How many contracts do I do? That's what recipes are. Okay, recipes. You're going to go out, you're going to bake a cake. Fantastic. You're going to use a recipe the first time through. Maybe after maybe after you bake that cake 50 times, you don't need the recipe. Okay, but initially you need a recipe. What we do here at TheoTrade is create those recipes. We create very detailed checklists. Let me explain. Okay, trading, it's all about what ifs. You got to be able to answer all of this. What might be a good infinity spread candidate? What's the correct options expiration? Get the wrong expiration, dead meat. Okay. How much capital do I commit? When should I execute the trade? What strike options do I buy? How many do I buy? How many do I sell? That's what we do here. TheoTrade has answers to your questions. We build recipes with definitive criteria, literally checklists for each strategy and all the unique variables that you're going to encounter. When I talk about variables, what if the stock goes up? What if the stock goes down? Okay. The word checklist. Okay. Listen, that is not mine. All right. This is not unique to Don over here. The criteria, okay. The criteria comes from experience. The criteria comes from 15 years of working at a brokerage firm and studying order flow. The checklist, all I did is I took that criteria and I put it in checklist format. And the idea of the checklist, I'll tell you exactly what it comes from. It comes from years of flying around the world. Fly around the world. The first thing you do is you get into an aircraft and you watch the pilot. I do. Zone out, watch the pilot. What does the pilot do? Pulls out, a literal, and they have iPads now, but they pull out a literal book and a checklist. And they go through check 1, check 2, check. It's a pre-flight checklist. They don't just throw the keys in the aircraft, hit the gas, and take off like you do in a car, right? There are checklists for everything. If you're going to trade, you got to have the exact same thing. You got to have that methodology that you're going to go through, okay? But we take it further than that. We're not just a pre-flight checklist. Once you actually get these trades on, you're going to encounter variables. What happens when a dividend is coming? What happens when expiration is coming? What do I do if I get an assignment, an exercise, right? This is what we do. We answer your questions. Okay, what's the right probability for the trade? How many option contracts do I do for the account size? When do I close my infinity spread? What if the stock sells off big? What's the correct return for the strategy? What if it rallies massively? Can I fix a losing trade? We give you, it's about how, it's about when, it's about why, it's about what price. It's literally just the beginning of the variables that you're going to face when trading these infinity spreads. And, most of you have probably come to this conclusion that you can read what a spread is. And I was talking about this earlier. You might even know how to build types of ratio spreads. Right now, you can go out and you can Google what a ratio spread is. You can Google it. 1,000+ pages will show up what a ratio spread is. Not one of those pages is going to take into context precisely how to build the trade, what the right volatility should be. I'll give you the exact delta of the options you should buy, the options you should sell. I'll show you the specific volatility. Every single step and every single nuance of this trade is covered. You need TheoTrade's recipe for success for infinity spreads. And that comes from 20+ years of trading experience. It comes from access to client order flow for 15 years, literally viewed and studied millions of trading accounts. By the way, this is just my experience. There are several individuals here at TheoTrade, that came from the brokerage world. And again, I put a huge amount of weight into watching client order flow. I mean, I ran education for 15 years at a firm with like literally the largest options order flow in the entire industry. And what you learn after years, criteria is your recipe for success. The following strategy, the infinity spread and corresponding criteria, it does require the utmost attention to detail. And we spent years fine-tuning this particular trade in this particular setup. So when we approach the section on criteria, you follow the steps to build a trade. We built, okay, 2 separate courses for this particular trade. And we did so to actually show you a little bit about a volatility crash course, okay, and then of course a volatility backspread course. So we actually broke this down intentionally, okay, into 2 subsection courses. This is maximum returns with infinity spreads, and we packaged it together, okay? We packaged it together. The class is literally, it's ready. It's $497 tonight, okay? But before I go any further, I'm going to take you through this for a second. Before I go any further, I want you guys to understand something about what we do here at TheoTrade. Yes, I am the trade instructor for maximum returns with infinity spreads, okay? I taught both of these courses, wrote all the criteria, right? There's the volatility crash course. It's 2.5-hour course. It's available immediately, okay, with 24/7 access. Then we also have the volatility backspreads course, which is a 3-hour course available also immediately with 24/7 access. The slide decks that include all the entry and exit criteria, the checklists, are available immediately for download. And the courses, they have 24/7 access, but we built our own mobile applications for iOS and Android. So you can actually download these onto a mobile device and watch them, okay, on your own time. Now, I'm going to give you the curriculum for this class, okay? Or I should say classes. I'm going to give you the curriculum for the classes here in a moment, like what you're going to learn in here. But I want you guys to understand something about $497 is we here at TheoTrade do not go out and sell individual classes, okay? We do not do that at all, okay? When we first got involved in this business and when we first built TheoTrade, to differentiate TheoTrade. And I'll explain it like this. A lot of you guys come here this evening from all different walks of life, but out of curiosity, how many people here have ever taken a course somewhere else? Anybody? So how many people here have ever taken a course at some education firm? Because the point that I want to make with this, and before I go any further, is this. You go out and you pay $497 for a course. And after you pay $497 for a course, you find out that you have to buy an indicator. That indicator is going to cost you $497. By the way, you have to take a class to learn how to use the indicator, so you're into it for $497. Listen, we here at TheoTrade, like, we get this business, okay, more than you know. I started in here in 1998. In 2001, okay, at the ripe old age of 24, I was running an education division for a brokerage firm that nobody even heard of. And in running the brokerage, firm and the education division, I came across every single educational package out there. And it drove me crazy because people would literally spend more money on classes and crap than they would on trading. And I tell you again and again, this is about trading here. We here at TheoTrade do not sell you 2 classes and give you a little pat on the tushy and go ahead, go out into the wild blue yonder. Go trade over there, okay? You got to be nuts. That's not what this business is about. Here at TheoTrade, okay, we trade with you. And we want you to understand that we trade with you. And we broadcast all day. And we trade live, okay? And we don't call them, like we trade live. We allow you to email us, okay, for questions. I want you to understand, before I even go any further and show you the curriculum in here, that everything that you will need in this business, whether you want to trade or whether you want to invest, everything you're going to need is covered here at TheoTrade. And tonight, I'm going to present to you a couple of bonuses. And as I actually jump into these bonuses, stick with me here. You're going to want to hear this, okay? Because when I say we provide everything, okay, yeah, we charge $497. But wait until you see, okay, what basically $500 covers. because you cannot, okay, you cannot look at this any other way until you actually see what we provide for $500. This is the Infinity Spreads workshop curriculum, right? This is what we actually do in these classes. So in the classes, we'll teach you how to construct an infinity spread for maximum returns with minimal risk, how to build your own infinity spread, meaning that we'll actually take you through the criteria in a stock, index, ETF with detailed step-by-step entry and exit criteria. Okay, how to build infinity spreads, whether you're bullish, whether you're bearish, whether you're neutral. We'll actually look at directional bias in here, how to hedge your portfolio from pending market turmoil with volatility-sensitive strategies. So this is a hedging portion of it. When to open, when's the best time to close. Okay, we'll actually do this based on percent returns. The tools and strategies for analyzing market conditions. So we're going to talk a little bit about expected move, how to create trades based on movement in the market of volatility and not purely direction. These trades are heavily about volatility, how you can generate just huge returns off a very small account. Okay, what strikes, what expiration. Okay, we'll give you everything to give you the highest probability of success trade, and why infinity spreads are the perfect for part-time traders. Again, this is not a trade that has to be heavily monitored. Okay, if you want to monitor something, I got something for you to monitor, but this is not the trade. Okay, in addition to taking you through the infinity spread workshop, every single week, we actually provide videos specifically on this strategy. Okay, so if we text trades out to you, we don't just text a trade out and go ahead again and give you a little pat on the tushy and go ahead, you go out into the wild blue yonder and you trade. We actually give you definitive, okay, what am I doing? Why am I rolling the trades? Okay, every single week I record a video specifically for this strategy. Not to mention all the other stuff that I trade, but the infinity spread is important, okay? And because it's important, we spend some time on it. Now, before I go any further, as I said, we get this business and everybody, we call it a bonus here. You know what? I don't even like the term bonus, okay? At TheoTrade, as I said a moment ago, I've looked at the whole industry and we've just had it. We can't stand how everybody gets nickel and dime. Before you know it, a good education in trading shouldn't cost you your entire trading account. I want to say that again because it kind of feels good. A good education in this business should not cost you your entire trading account. Like, we understand you want everything to trade. You want everything to invest, and you want it at one place, and you want it at one price. This is what we do. The first bonus this evening. Tonight, you are given access to 93 trading classes. It's everything that we have. Okay, when I say everything we have, we launched TheoTrade, okay, in 2016. Since then, we have done 93 full-blown classes. When I say full-blown classes, maximum returns with infinity spreads, okay? All of these are available immediately. Guide to surviving and thriving extreme volatility, volatility back spreads. Guide to small account growth with in-out spreads. By the way, hands down, the most prolific class we've ever done, in-out spreads, okay? That class has actually been watched. Over 30,000 people have viewed this particular class. Growing a small account with black book spreads. How to collect income being short. The next big short. This is actually risk twist spreads. By the way, the risk twist spreads, very, very cool class. Guide to selling high probability spreads. Iron condors. Selling premium and minimizing your risk. Day trading NASDAQ futures. Huge, huge day trading NASDAQ futures for those of you who want to be involved intraday. Covered calls. Income generation for your stocks. So you want to just learn about covered calls? It's in there. It's all part of the 93 classes. Okay. Pairs trading, top 10 skills. Listen, I could go, all I did is just give you a smattering of the 93 classes. Okay. Again, if you bought each class, it's $497 and $497. Access to at least $9,000 in classes alone. And we give you access to everything now. And you're like, well, but, okay, that sounds like a lot. You don't have to watch all 93 classes. Everybody has a certain genre of trading they like. And by the way, with 93 classes, I don't want you to think for a second that I did all 93 classes, because I didn't. Okay. Here at TheoTrade, we put, okay, a lot of stock, if you will, into the instructors. Okay. Our instructors are traders. And when I say that, here, let me introduce to you the TheoTrade instructors. Okay. I start with Jeff Bierman. Jeff Bierman worked with us at TD Ameritrade. Jeff actually worked side by side with me for 7 years at TD Ameritrade. He was actually the chief market technician for TD Ameritrade. If you are on Thinkorswim charts, Jeff actually built over half the studies for Thinkorswim charts. Okay, analyst trader. Okay, by the way, Jeff Bierman, here's also another little side note. Jeff Bierman is a professor of finance at Loyola. He's actually now just teaching his first graduate classes. So, Jeff, you can pay $42,000 to see Jeff at Loyola, or you can join him here at TheoTrade for $497. He moonlights with us on the side, but Jeff and I go way back. So as I said, we spent 7 years together at TD Ameritrade, kind of joined at the hip. Next on the list, Matt Williamson. Matt's our market neutral. He's our premium selling option strategist. Matt is actually, again, every one of us, so we all know, 15 years or more of experience. Matt, 15 years of experience going out there and selling premium. When I say market neutral, what does that imply? He's not a big directional trader. Jeff's our big directional trader. Next on the list, Corey Rosenblum. He's our senior strategist and resident swing trader. Okay. Brandon Chapman, CMT. By the way, speaking of CMT, okay, that is an extraordinarily difficult designation to get. Jeff Bierman is a CMT. Corey Rosenblum is a CMT. Okay, there's only a few thousand CMTs in the entire world. We have 3 of them on our crew. Brandon Chapman also worked with me at TD Ameritrade, and Brandon wrote most of the education material for TD Ameritrade. Some of you guys will remember this. Okay. A couple years back at TD Ameritrade, they had a class, and the class was 18 months long. Does anybody remember what I'm talking about? There was an 18-month class that was sold at TD Ameritrade. For 18 months, they charged $24,000 for this 18-month long class. Brandon Chapman actually wrote almost all the course material. Brandon worked in the education group. I worked in the education group, ran part of the education group, but Brandon wrote that course. What we do here, and he'll be the first to tell you, what we do here at TheoTrade will absolutely smoke what this 18-month course had in it. And it's $497. But we put a lot of weight into, again, our instructors here. Brandon's been around this business for over 20 years now. Steve Slim Miller, 43-year veteran stock options and futures trader. I've literally known Steve Miller since I am a kid. Next on the list, last but definitely not least, Tony Rako. Okay, all Tony does all day long is trade NASDAQ futures. He's an intraday strategist. He trades throughout the course of the day and just calls out trades. Hundreds and hundreds of trades can fly through our chat room in a given day. And that's what Tony and Corey actually do on a day-to-day basis. Tony actually runs, though, specific NASDAQ futures trading. All right. So your first bonus again, 93 classes. But those 93 classes come from 7 instructors. There's 6 here, including myself, 7 full-time instructors. Next in the list, we'll give you an all-access TheoTrade VIP membership pass. It's free. Okay. What that basically does, we are going to give you 3 months, of unlimited access to TheoStream. And you're like, I don't even know what that is. Well, first of all, you got 3 months to watch 93 different classes. So you're going to be binge watching our classes like you're on Netflix, right? Next, we have a live trading room. The live trading room, we broadcast 6 hours a day. People, it's intense. It's 6 hours a day. You don't have to sit there and watch 6 hours a day. Every single word is recorded. Every single word you can play back. It's all archived. You can even play it back at like 2 times the speed. The traders provide real trade ideas, real-time market insights. And a lot of people go, I can't watch all day. Well, you can, because you're not really going to work. But we do push and text notification of trade ideas, including infinity spreads. The infinity spreads is a big one for us. So if you can't watch all day, we get it. By the way, I'm on for the first hour of every single trading day. I like it. I like doing it. I probably do, 5 days a week, but I'm usually in the chat room 6-7 hours broadcasting a day. 5 distinct trading portfolios. So we have different portfolios. And then we do daily coaching sessions. What's a coaching session? It's continued education. Most of the coaching sessions are done by Professor Jeff Bierman. Why? Well, because the guy's a professor of finance. I mean, he's going to do a better job than I am. Instructors directly answer your questions by email. So stop right there for a second. We give you 3 months access to everything we do. We trade live. We text out trades. This one alone is worth it. For $500, do you think it's worth it? you can email us. We will email you back. When I say that, you can email us. So we don't hide behind like, well, I can't answer this. You don't have to email us and be like shy and be like, so I have a friend that has a position and listen, forget all that garbage. You can email us and say, am I doing this trade right? I'll tell you yes or no. I'll tell you exactly why. Okay, it's going to work, why it's not going to work, good, bad, or indifferent. We're going to actually email you back. We're going to email you back the answer. Okay, it's access to $997 support, trades, and insight. You know what? I'll tell you, just the email access alone, okay, is worth this. I mean, if you emailed us once in 3 months, if I can save you on one trade, you think that's not worth $500? That's why access to what, $1,000 support, trades, and insight? Forget it. Okay, it's worth way more than that to you. You can't make mistakes in this business. There's too much on the line right now. It's money you worked for. Okay, you pay $500. You email us a couple times, and again, there's no limitation to the emails. We don't care. I spend 4 or 5 hours every single day answering emails. That's the lifeblood of what we do here at TheoTrade. It just is. Okay. By the way, in bonus number 2, we'll also give you all of our indicators. Everything from day one. There's 59 proprietary indicators. And as I said, this is the stuff that like people don't get. Okay. This is the stuff people sell. You know, the auto expected move. We're going to give you this one in a moment. We could sell this for $497. We could sell this for $497. We could sell this for $497. Forget all of that. Everything is $500 here. Why do we do it? Okay. It's the right thing to do. It's the right business model too. You think about it. Okay. You provide everything that people need to trade. You provide everything in terms of trade ideas. Okay. Chat room, support, email, all the different indicators. Okay. What do you think? Right? We're approaching right now 6,000 clientele. Okay. At TheoTrade. Okay. That's a lot of clients. 6,000 clients. We're constantly adding more instructors here. Okay. Why? Because you email us, and that's fine. You get access to all of these. Quantix, huge. I use it every single day. Next generation squeeze indicator. Okay. IV rank versus percentile. TheoQuant, unusual put options activity. Sizzle index. SPX, expected move. Another $1,800 in indicators and scans. Again, this is all part of the $500. We're going to give you a third bonus tonight. Third bonus tonight, there's a live class coming. Okay. When I say there's a live class coming, it's coming. There's nothing I can do about it. Listen, we have 93 classes. Well, guess what? This one, okay, will take us to 94. This class, okay, is the newest version of Tony Rago, okay, intraday trading with NASDAQ futures. This is for somebody that absolutely wants to trade throughout the course of the day. I'm going to let you know right now, this is a trader's class. This is intraday trade, day trading, whatever you want to call it. Okay. You do not have to have a huge amount of money in your account. Why? Because now, okay, they offer micros. Micros. You can open up and you could trade like a mad person with micros, because micro futures contracts, there's no day trading rules anymore. There's no day trading rules in futures. And people go, I don't even know what a future is. That's why there's a class for it. Okay. Tony is doing a live class Saturday, August 8th. And again, everything I'm talking about right now is included, and people get lost like in the weeds over here. You want to come here because you want to learn the infinity spread. This was just icing the cake. The next class is coming up August 8th, so why not tell you about it right now? And I'm telling you what, okay, you need to get ready for this class. If you want to do the intraday trading NASDAQ futures class, I'm telling you, between now and August 8th, you're going to go through some material. I'll tell you exactly the material to go through to get ready to go to this class. It's a 3-hour class because you can't take more than 3 hours of anybody. The course will be archived immediately afterwards, okay, and download. But the entire class will be available to you live on August 8th. It is going on August 8th. It's 9 a.m. to 12 p.m. Central Time. Put huge weight into this because Tony, okay, I mean, this is the guy for intraday trade. And people say, well, how come it's not you? That's not my genre. I'm an options super geek. I look at implied volatility and spreads and so forth. Tony, this is your intraday guy. Okay. You can't, what do they say? Master of all, the master of all trades. You can't master all genres of trade, right? So we hire instructors that have vast differentiation specifically from what I do. And Tony's one of them. It just trades NASDAQ futures throughout the course of the day. But the jack of all trades, the master of none. All right. But guess what? Tony trades one thing. his entire career. Trades NASDAQ futures. And that's why he's the best at it. I mean, literally, there's nobody else in this industry. And people ask, like, how did I find all these instructors? Well, guess what? For the previous 15 years, who do you think was looking at all their accounts? As soon as I left TD Ameritrade, I'm like, I know this guy actually does well. I call up a couple of random people. Okay, it's a great story behind me actually talking to Tony Rago. Matt Williamson. I called Matt Williamson out of the blue. Guy never, like, he knew who I was, but guy never expected a call. I go, I'll put a microphone in front of you and you get to teach for an hour a day. Absolutely. Tony, okay, Tony's born for this. Absolutely born for this. Loves talking about like NASDAQ futures. All he does for 6 hours a day is the man trades NASDAQ futures. Check this out, okay? Intraday trading NASDAQ futures class. So what he's going to give to you is a proven formula for intraday trading NASDAQ futures. Detailed step-by-step entry criteria. Listen, everything we do is about criteria. How to build your trading plan so you know how many handles. Handles are points, okay? +1, +2. Those are points that you book every single day, okay? 2 handles is worth $40. You're going to see people here in a moment. I'll show you. People make like 22 handles. That's 22 times 40. You're making $800-900 a day. How to control your risk in every trade. The entire strategy that Tony teaches in futures is how about what we call get risk out. How to use little known key NASDAQ levels. He's going to talk specifically about levels that he created. Get risk out, okay, and actually ride these trades. A consistent day trading setup in the NASDAQ futures. So you could be long or short. By the way, direction ain't going to matter. It's all about the setup, okay? Day trading NASDAQ futures are perfect for anyone that wants to day trade. And you have to want to sit there, okay? Anytime the NASDAQ futures marketplace is open, you set your own hours. Most people are trading 2 hours plus a day, okay? How to minimize your risk and maximize returns, all right? Again, there's nothing, there's no insight anywhere near what this man can do in NASDAQ futures. Again, I put huge weight into our instructors outside of myself, okay? Why day traders, okay, with minimal futures experience can trade this basic strategy. And again, you don't have to look at futures as being this big, scary thing. There's micros now. Micros, you know how much you make or lose in micros? Instead of it being, okay, $20 a point, the micro is $2 a point. You make or lose $2 every single point the NASDAQ moves. You're like, well, why NASDAQ futures? Why not S&P futures? Okay, have you seen the NASDAQ futures lately? All right, this is like the look. This is only the last 3 weeks, okay? That's the NASDAQ futures. That was what we term Mr. Toad's Wild Ride. You went everywhere, baby, to get nowhere. This chart goes till today. I thought you guys would find that interesting. That's 3 weeks inside of the NASDAQ futures broken down into hourly charts. That is an hourly chart, okay? But that's only like 3 weeks of trade in there. How wild is that? You're like, why NASDAQ futures? Because, oh, baby, do they move, right? This is what our members are saying. This is specific, okay? Specific. And I grabbed this from one day, right? I wanted you to see this in July 1st, plus 22. That's on the micros, okay? Randall. Took a while to get there. 4 trades, he's plus 60. That's plus 60 times 20. That's $20 a handle, okay? Couldn't resist. 18 back through the short, okay? Plus 10 on 2 contracts. That is plus 20 handles. That's $400 right there. Foghorn, okay? 122 handles booked in 4 trades. Taking a break. Of course he's taking a break. Okay, plus 22. Okay, over here it's plus 5 on a scalp. Plus 26. Okay, again, beauty of Tony's methodology is genius. The guy is excellent. Again, I put, as I said a moment ago, so much weight into this. Here's Doug K, my best day ever, plus 88 in the funded account, plus 52 in the newbie combined account. Okay, I might not trade tomorrow. Come on, you got to show up every day. Tony, okay, I want to play, but I'm taking my 26 handles. 26 handles. Again, what is that? You know, it's 26 times 20. All right. So for the most part, this individual's making what? You know, close to $600. Super Mario, Alan, I've done 6 trades so far, 4 shorts, 2 longs, plus 224. By the way, Super Mario, one of the better traders in there. Karen, I also did the S26. I got out plus 5 and plus 10. Okay. The S26 means short to 26. Sweet Bobby. Okay. Day done plus 42. Listen, that's what you got to understand. That's what NASDAQ futures trading is about. Okay. These people sit there and they trade with us all day long, right? That's what it's designed for. Listen, what we do here at TheoTrade, I know I went a little over, but what we do here at TheoTrade, we include everything that you're going to need to invest and trade. We do classes, we do coaching, we do email access to the instructors. I put a huge amount of weight into email access, live trading room with live trades, indicators and scans, mobile access. It's everything that you're going to need in this business. Literally everything you're going to need to succeed in this business is what we provide. And we like to call this, and I specifically like to call this, we here at TheoTrade, we tried to build the Netflix for traders. Okay, when we call it the Netflix for traders, you name a genre of trade. Literally, when I say like a genre of trade, what do I mean by that? And I'm going to show you here momentarily what TheoTrade looks like. Okay, I'm actually going to take you, this is TheoTrade. But, of course, my browser dies on me as I'm doing this. But I'm going to take you into specifically here, and I'm going to open up a new browser so you guys will be able to see it momentarily. Okay. But I'm going to take you into every single aspect of what we do here in terms of like classes and so forth. And I said like different genres of trade. Okay. Here's the class archive. You want to do option strategies, technical analysis, day trading. Okay. We have an entire section specifically for those of you that want to day trade. Okay, these are all the classes just on day trading. We're not going to stop there. We're going to go, again, a lot deeper here momentarily. And that's why we call it kind of the Netflix for traders, because there's something for everyone. Listen, tonight, okay, TheoTrade, it's $297 for 3 months. Okay, why do we do that? Again, that's what we're about. We're about providing, okay, a reasonable, again, a really reasonable price for 3 months of access to this. Okay, we give you access to over 93 trading classes, but you can't forget what you're actually attending for is maximum returns with infinity spreads. Okay, it's the infinity spread courses, but we also, again, we're going to give you access to 93 different trading classes. There are new monthly classes, as I said a moment ago. The next monthly class is August 8th. Okay, with Tony Rago. We're actually going to give you a live trading chat room. There's 6 hours a day. Indicators, there's 59 proprietary indicators and scans. We do text, push notification trade ideas, 5 unique portfolios. There's daily coaching sessions by a professor of finance from Loyola, and you can directly email us. It's everything, all right? Go right now to theotrade.com/profit, and that's where you can actually enroll for it. It's $297. So I wanted to take you into, just for a moment, as I was saying, and I'll bring you over to this. This is theotrade.com/profit. And I will pop this back on your screen here again momentarily. This is where you go. This is where you enroll, theotrade.com/profit. Okay. I am going to show you a bit more about TheoTrade here momentarily. Everything from classes to the different portfolios we offer. Okay. To there's a lot of people, they look at this and they say, you know what? It's a little bit overwhelming initially, right? So, I got to actually come in here and log out and log back in. I apologize. Okay. I got browser issues. So I come in here and I take you through, detailed all the stuff about an infinity spread. And you probably think to yourself, like, where would I even begin here? Okay. You begin in what's called start here. Okay. Start here is options 101. Okay. Options 201. Options 301. I mean, it's literally taking you through verbatim. Okay, step by step to get you prepared for some of the classes that we offer here at TheoTrade. And I wanted to show you that, okay, before we go any further tonight. So again, everything that we've talked about, including Tony's class, including, of course, the infinity spreads, it's $297 for 3 months. One last aspect over here, we also make this a completely riskless trade. So it's everything you're going to need to start trading, from novice to expert. That's why I was showing the start here. And to the expert, we've got classes that are just going to blow your mind. We'll give you a money back guarantee on it. Trade with us over the next 3 months. If you're not completely satisfied, and I want to make something clear on the word satisfied, okay? We don't put, any context around the word satisfied. If you're not satisfied, just email us. And if you're not happy, listen, we'll give you your $297 back. People, it's $297. It's not going to break us to give you $297 back. Just email us. Now, there's only one real stipulation here, okay? You have to actually trade live in the next 3 months. It's the only stipulation. The reason I do this is because there are too many people, unfortunately, that will come here and they'll pay $297. they will do no trading, and then they would just ask for their money back. So the only stipulations I've gotten here, you got to do 10 trades in the next 3 months and follow our criteria. That's it. You have to have an initial account value of $2,000. Okay. By the way, the $2,000, that's not my rule. That's actually a FINRA rule. Okay. So FINRA rule says if you're going to trade spreads, you have to have $2,000 in the account. You have to follow our criteria for infinity spreads. Okay. By the way, you could use any of our strategies. There's 93 classes. Use whatever you want. Okay. You have to use our criteria. And the last stipulation, these have to be real trades. This ain't paper trading, people. The only reason that I do these stipulations down here of the 10 trades, because nobody gets, there's no free lunch in here. You got to actually watch the classes. I don't want to hear I didn't do this. Listen, commit that you're going to take a little time over the next 3 months and you're going to trade. Most of you guys are trading anyway. I mean, when else have we ever had time like this? Okay. I haven't gone to a store myself in 6 weeks. I haven't gone anywhere in the last 6 weeks, and I have 3 little kids. I don't go anywhere. Sit in front of my computer for about 7 hours a day. Okay. Trade throughout the course of the day. I've traded now more than I have in years, and I'm a pretty heavy trader. I've been trading a tremendous amount. Okay. That's why, I showed you to begin with tonight. There was what? Okay. There was some 3.8. It's blowing my mind because it was literally just 2 million a couple of months ago. There were 3.8 million trades being done a day over at TD Ameritrade. Why do you think there's, almost 4 million trades a day being done there? Because people are trading. Take the time over the next 3 months, trade 10 times. Okay. If you don't love us, get your $297 back. Listen, get to TheoTrade now. We're going to work with you directly. There are 30 spots tonight on the TheoTrade riskless deal. Now, we do limit how many riskless spots that we do. And the reason is, okay, every individual, okay, that does the riskless trade deal, I have to review 10 of their trades. It's a matter of size. I mean, listen, that would take me a tremendous amount. So we're going to reduce this to 30 spots tonight. Send us your trades. It has unlimited email mentoring. It's $297, okay? The riskless offer, never been available before, with infinity spreads. Plus, you still get to go to Tony Rago's live futures class. Okay. And again, I put a huge amount of weight into Tony's class because I also am heavily involved in trading NASDAQ futures. So there's no if, and, or but about this. All you have to do, if you're not completely satisfied, just email support@theotrade.com. Show us the 10 trades and you're out. You're out of the contest. Now, listen, I wanted to bring this up. What our members are saying, I wanted to bring this up because this is important. Very important, specifically for the infinity spread. This is actually from Brian, and I brought this up from March 16th because March 16th was the middle of the Corona crash, right? It says, Don, wow, I want to thank you again. I want to again say thank you for what you have taught me in the last 2.5 years. I bought into what you taught about risk twist spreads, which are infinity spreads, and duration positions. I started to trade options almost a year ago. I missed out on the last market move up, but at the moment my IRA is up 14.8% for the year. What I invested in TheoTrade has been so worth the money. Thank you, Brian. I wanted to bring this up because this gentleman in the middle, okay, of the most hideous crash, okay, literally since the Great Depression, guy's actually up 14%. That's huge, and that's why I brought that email into scope. All right. The next one I want to bring to you actually comes from Chris. Chris said, this is on March 26th. Again, I learned more in the past 4 weeks about managing and defending my portfolios than I've learned in my entire trading life. Nothing I've learned, okay, would have been possible without having tuned into your teachings for the past 2 years. Also, my atomic hedge, it's a hedging strategy, took a large sting out of my long-term IRA destruction. You clearly don't have to be a teacher, but thank you for doing so. Stay safe, from Chris. And again, I just wanted to review everything that we're actually providing tonight, okay? And then I'm going to answer a couple of questions in here. This is what we provide. TheoTrade access you get today for $297. It's $297. Again, that's why we have 6,000 clientele here. Now, before I go any further, there's somebody that already chatted into the room, and I want you guys to understand an aspect about this. I think it's important before I go any further. Okay, the $297, and I want to reiterate this, okay, $297. This is not a membership, okay? You enroll right here, theotrade.com/profit. I will take you there in a second. It is not a membership. It is a one-time charge of $297. Okay? So what happens after 3 months? After 3 months, we shoot you an email. Okay? Do you want to do this again? You have to actually, okay, approve us to do it again. This is not a gym membership. How do you get out of the gym membership? Surprise, you don't. We hate that. You should hate that. We charge you $297. Okay? If you don't love us, don't do it again. If you love us, do it again. Okay? Listen, we have 6,000 members because people do this again and again. Oh, and somebody just chatted in. They go, what do you charge after the 3 months? It's another $297. Okay, and if you want to do another 3 months after that, it's another $297. This is not like an introductory price. Listen, I just hate all the gimmicks and crap like that. Do you guys not get that? Okay, I don't like charging for every class. I can't stand a la carte. I don't like memberships, and everything that I embody and like that I like, and not, it reflects it in the price here. It's $297 for 3 months, and that's it. Anyway, the bonuses. Okay, so we give you a maximum returns for infinity spreads. Okay, then obviously we give you 3 months access. It's 6 hours a day in the chat room that's live. Every trading day, by the way, is 6 hours and 30 minutes. There are days like Wednesdays. Wednesdays, we broadcast for 7 hours. We actually do a happy hour at night. Everything's archived, and you can replay this, okay, on mobile devices. We email trade ideas. Well, actually, I shouldn't say we email them. Now we text trade ideas, okay? We text and use push notification. You do have to have a mobile phone for text, okay? That's bottom line. You got to have a phone for that, or an iPad. So trading indicators and scans, we do daily coaching sessions, and we do 10 hours of live support. The 10 hours of live support is the coaching sessions, right? Then bonus number 2, we give you 3 months unlimited access to 93 classes. There's day trading and swing trading and technical trading and beginner options trading, okay? And then, of course, the third bonus, there's a live class. And that live class is coming up on August 8th, intraday trading NASDAQ futures. It's TheoTrade.com/profit. In fact, I'm going to show you TheoTrade in just a second, but before I bring you there, follow me to this link. It's TheoTrade.com/profit, okay? And follow me to the link for the auto expected move indicator. So I'm actually going to bring up, this is TheoTrade. Before I show you a little bit about TheoTrade, though, I wanted to pop right to here. This is TheoTrade.com/profit, okay? So it's just like it sounds, profit. P is in Peter, R is in rough, O, F is in Frank, I, K, T is in Tom. So, all right, my alphabet's not so good though. TheoTrade.com/profit. We are also here to answer questions directly in the chat room. So you can actually, ask questions directly of a GoToWebinar, or you can ask questions right here. Okay. So you can ask questions. It's just easier sometimes to chat in over here. I think everybody kind of appreciates that these days. But what I wanted to show you in here is the maximum returns with infinity spread class. Okay. Again, includes the volatility crash course and the back spreads course. There are 30 riskless trade spots left. By the way, right here, the 30 riskless spots. Okay, I will tell you here momentarily how many spots are left. It takes me about 5 minutes after people enroll. Okay, in addition to these two classes, of course, the bonus here this evening is the class coming up August 8th. The other thing I want you to see is when you click Add to Cart, and I'll take you over here briefly. When you click Add to Cart and you scroll down a little bit, okay, what's important is under the payment info, okay, there's 2 actual payment things you could do. You could actually do a single payment of $297. You could do 2 payments of $149 if you want. But that's not the why I'm bringing it up. I'm bringing it up so that you understand it's a one-time charge. That's the only reason I brought this up, so that you see it's a one-time charge. We do not, we do not auto-renew, we do not auto-bill in any way, shape, or form. So I wanted to make that clear. Again, if you go now to TheoTrade.com, again, it's TheoTrade.com/profit, enroll for it. I'm going to actually show you TheoTrade, and then I'm going to answer some questions in here. So this is what TheoTrade is. This is TheoTrade. This is actually the chat room right here. When I say the chat room, up top here, this is where my screen will broadcast live first thing in the morning. First thing in the morning, we kick off at 9:22 Eastern Time. 9:22 on the button. That screen will start to broadcast my screen. Down below, this is actually the chat room, okay? And this is all of our clients talking to one another. There are 6,000, okay? 6,000 clients, of which in any given day now, there's close to 3,000 different individuals that actually pass through the chat room, okay? All of the instructors, like Corey, for example, would be highlighted. So if you want to see Corey talking, okay, Corey, Fed Day tomorrow, any of the instructors that speak in here are actually going to be highlighted. All right, so onward and upward from there. So that's the actual chat room. As I said, we have a Start Here menu. For those of you that are experienced, I just want to throw something out. If you're experienced, you don't have to go through Options 101, Options 201. I don't care how experienced you are. Check out, okay, Order Execution Part 1, 2, and 3. If you think you know about what an order execution is, check these classes out. You're going to be shocked. What order execution does is it teaches you how to get better fills in stocks, options, and futures trades. Okay, that is by far and away, if there's an expertise I have, it's an order execution. Okay, 15 years inside of a brokerage firm, I could tell you every nuance of clicking confirm and send. I've been on the market making side, I've been on the brokerage side, and now I'm just a trader. So we'll take you through how to get better fills. And I think that's huge. Anyway, this is the Start Here menu for people that are just completely new, okay? Completely new to this. Next in the list over here, we come over to, for example, the class archive. When I take you to the class archive, what I mean by this is where 93 different classes live. And if you're curious, I clicked on day trading earlier, but like here's option classes. I want to see what the option classes are, okay? Small account, options trading workshop, Butterfly's Guide to Weekly Returns, The Next Big Short, Risk Twist, How to Collect Income Being Short, Selling Options for a Living, Back Spreads, Volatility Crash Course, Surviving and Thriving in Extreme Volatility, Gamma Irons. I only did Gamma Irons 2 weeks ago. The class almost killed me. It took so much work. Controlling Your Risk, Black Book Spreads, Straddles class, people, it just goes on and on. Okay? Nobody at any price has an archive as deep as what we do here at TheoTrade. There's just nothing like it. And by the way, you look at this and you're like, oh, there's so much. How am I going to find anything? We actually built a search engine in here. So you can come in here and you can say, I want to know everything about in-out spreads. So just type in like in-out. In-out spreads, a big strategy we use here. In-out spreads, Q&A. Okay. Guide to in-out spreads, Q&A. We do some Q&A, so that's going to answer a lot of questions on there. So it has like a Google almost search engine for everything that you want to see. So again, we provide specifics in terms of trades. You can look at different portfolios, okay? The member chat room, the shared studies, okay? You name it, it's in here. We even have a report done by Corey Rosenblum. That report, okay? You'll love it if you're a swing trader. Just as a swing trader's report. All of this is part of TheoTrade. Just click add to cart. Again, it's $297. It's a one-time charge. Now, I forgot to show you guys, for those of you that are looking for the indicator, go to theotrade.com/profit, right? theotrade.com/profit. Scroll towards the bottom of the screen, okay? And you will see the expected move indicator. Now, time out. If you're enrolling today, you need not download that. It's on our site. We'll give it to you. Okay. It's on our site. So again, it's theotrade.com/profit. Let me actually take you into some general questions and then some specific questions. Also, as I promised, I will tell you there are 30 riskless spots. There's a lot of people enrolling right now. So I'm actually going to, read off who is enrolling to know exactly how many spots that we have left as we go along over here. So a couple of general questions that I want to answer before I go into some of the detailed questions of the chat room. Okay. First of all, people always ask us, what do we need? When I say like, what do we need? Like, what do we need to get started? I think you need a laptop and an internet connection, but I'll take that back. You don't even need a laptop these days. Okay. You just need an iPad or an Android tablet. You can trade off of it. Some people are actually now doing this completely on mobile, just fine. Listen, when it comes to education, we have everything you're going to need to get started, from absolute novice to the most extreme trader. The second point to be made over here, okay? Second point, this is not a membership. We don't auto renew or auto bill you again. I just throw that in there in writing so you guys understand that. Number three, we're now providing Infinity Spread's weekly video update. So listen, nobody can tune in 6 hours a day, 5 days a week. There's videos here. There's nightly videos. It's a lot. So you're going to find a genre of trade. If you like Infinity Spreads, there's a weekly video update. It's as minimal as you want it to be. Okay. TheoTrade, we archive everything. We understand you can't watch everything live throughout the trading session, but when we archive everything, we're going to provide you access to TheoTrade Mobile, where you can download the archives. By the way, you can download an archive and watch it at 2 times the speed. It's kind of cool. So it actually has speed, variable speed. If you add your cell phone number when enrolling, some of you are doing this right now, okay? When you're enrolling this evening, put your cell phone number in there, specifically your cell phone number, okay? Because that's where we're going to send text messages. And then you can download TheoTrade Mobile for push notifications. Some people don't like what push notification basically is. You have our mobile app on your phone, and it pushes you a notification, it just pops up. You could miss a push notification. Nobody ever misses a text message. Number 7, you can email us anytime. Anytime. By the way, huge weight I put into this. For $297, you got somebody you can actually bounce ideas off of. We're going to respond within 24 hours. I put the 24 hours in there. Most of the time we respond same day, but please do not email us with 5 minutes to go to the close. Okay, on a Friday afternoon, like, get me out of here. And there's like 5 minutes to go. You're like, okay, because you can't get a hold of the brokerage firm. Like, I get it. Try to give us some time, all right? Understand, I personally do answer the emails. Everybody asks that. They go, is somebody else going to answer? Listen, I am Don. I will answer the emails. You email Tony, Tony's going to respond to you. Okay, that's what our guys do. Everybody spends 4 to 5 hours a day answering emails. That's what we do. I mean, we only broadcast like an hour here and I broadcast an hour, hour and a half every morning. Well, I do the rest of the day, answer emails. Number 8, I chat in the chat room. You're going to gain access to every course that we've done in the previous 4 years. Classes, coaching sessions, everything's searchable. Okay, name any trading topic and we've got an archive on it. All the trades that we talked about are done in an IRA or retirement account as little as $2,000. Number 10 is important too. At TheoTrade, we can help you get approved for options at several major brokers. I have a relationship, obviously, with TD Ameritrade. Spent a large portion of my career there. I have a great relationship at Tastyworks. I have a great relationship at E-Trade, a great relationship with Charles Schwab. Okay, it goes on and on because I know somebody pretty much at all the major brokerage firms out there. By the way, Charles Schwab has, of course, acquired TD Ameritrade. So, yeah, it is what it is. But if you need to get options approval, we can help you do that. Okay, remember, there are 30 riskless trade spots. There's not 30 spots left anymore, but there's a lot less than 30 spots. Listen, get results, take action, enroll for TheoTrade now. There's absolutely no risk. If you're in that first 30, there's absolutely no risk. Now, again, as I said, go to theotrade.com/profit. Okay, what I'm going to do for just a moment now is I'm actually going to take you through, okay, some of the specific questions from the chat room. And I'm just going to pop this page up over here and put the address in there. By the way, I just had somebody pop in here and they asked how many riskless spots left. Right now, there are 9 spots left. There are only 9 riskless spots left. So to read off the names of those that are enrolled, Carmen A. from North Carolina, Williams A. from Texas, Rahesh from Missouri, Brian R. from Washington, Bo S. from looks like Maryland, Richard S. from Texas, Michael D. from New York, Brad T. from California, Greg D. from Florida, Aaron J. from Connecticut, Lloyd L. from Missouri, Charles G. from Texas. I don't want to butcher this. Chi Chun Su from Florida. I think I actually got your pronunciation right. Ali E. from Canada, John B. from California, Delos A. from Utah, William H. from Mississippi, Toby Z. from Illinois, John B. from California, Cynthia H. from Oklahoma, John R. from Texas, Michael D. from Pennsylvania. We got a lot of people from Texas in the house tonight. We like it. Okay, spent a lot of time in Texas over the years too, because TD Ameritrade, a huge office of 2,000 people in just outside the Dallas and Fort Worth area. Anyway, there's only a handful. There's only 3 spots left now. I see more names coming through, which I'll read over here momentarily. Okay, a couple of questions that were specific to the chat room that I have not yet gotten to. How do you know when to use back spreads, infinity spreads, or other strategies? So that comes from Tom. So Tom, it really comes down to when to place the trade. It's not, okay, how do I know when to use? We're always going to have one of these strategies on. You could use the strategy like, in pretty much in extreme, even in the most extreme crash environment, you can still put on a portion of this trade. The better, I guess, the way to position the question is, when do you get the trade on? Okay. And that has everything to do with the expected move. So when somebody says, how do you know when to use back spreads? Okay. Well, it has a lot to do with the expected move, how big the breach of expected move happens to be. Okay. By the way, there's a couple more names that just came through on my screen. Thomas A. from California, James A. from Virginia, Lily Y. from California. Those three are added in there. Thomas S. from Texas. They're literally coming through as I'm saying here. There are, we are very rapidly, as I said, running out of riskless trade spots that are still available. Okay, next question on here. This one comes from Parnell. He said, is this type of trade recommended for novice traders? Okay. Actually, so the infinity spread itself is, in context of like, a novice and so forth, the infinity spread, yeah. I mean, I know this sounds kind of crazy, but the stuff that people are doing when they don't know what the market's doing, like people go out there and they buy a call or they buy a put in options. And quite frankly, those are the high risk trades. So buying a call or buying a put is way, way more risk, okay, than going out there and doing a structured like infinity spread. So with the infinity spread, is there some education that you have to get and some background on there? Yeah, I mean, but that's what these classes are about. So Parnell, yeah, the answer is I would much rather see you do an infinity spread because there's drastically less risk in an infinity spread than there would be in going out and buying a call or buying a put. What's assumed, as being low risk of buying a call and buying a put is infinitely more risky out there. So somebody asked about taxes. Were the returns taxable? So yeah, I mean, it depends. If you're in a taxable account, there's one thing I love saying this, Marion, and that's this. Okay, first of all, if you can trade in the retirement account, that's fine. Obviously, that's tax deferred. Okay, but paying taxes, although the most painful thing you'll ever do, the only people that pay a lot of taxes are the people that pay a lot of money. Okay, and I make no qualms about it. I wrote the largest check I've ever written ever on July 14th. Obviously, the date for IRS. I wrote the largest check I've ever written. 2019 was a solid trading year. And of course, I waited till like the last minute, July 14th. I'm like, honey, run the envelope down to the post office before tomorrow and get it postmarked. Nobody likes to write big checks on there, but it's the reality. Somebody was saying, what are the 5 trading portfolios? So in terms of like trading portfolios, yeah, I could take you in there. So in-out spreads, there's black book spreads in there. So those 2 big ones, in-out spreads, black book spreads, the infinity spreads, the duration portfolio in there. Okay. Those are like the primary ones that you'll hear. And then the last one is the TheoTrade tracker. TheoTrade tracker does a variety of different strategies. So those are the 5 portfolios. We don't necessarily call them like income spreads. And so a tool, hopefully that answers it. You'll see as you go into the different portfolios, you'll see some of the different trades, like the duration. You know what duration is? Long-term stuff. Okay. I like somebody actually asked this question too. Should you hold stock or trade it? Okay. I hold plenty of positions. I don't want you to think that you have to just be an outright trader. I actually do buy stock and hold it. Okay. I also sometimes short stocks and hold them. So this is not all about in, out, in, out. Okay. There are specific reasons to do just that. By the way, a couple more people, I got this one. I think I got Thomas S. from Texas and then Richard H. from California. Thomas, I apologize if I read your name off twice on there. Okay. We are literally down to two riskless spots left right now. And the last question I'm going to grab tonight is how many text alerts can we expect in, say, a week or a month? So, Raj, the way that text alerts work, okay, if there's an average, I would say on average, I'll try to text out, a couple trades here or there. But what happens is there might be a week where I literally don't trade and I don't send any texts out because the market stagnates. Okay. Then all of a sudden I'll send out 6 trades the next week. And it kind of goes like that. I would say, okay, on a given average month, you're going to get, 6 to 8 trades in a given month that we're firing out. However, those are the ones that we're texting. Those are the ones that we're tracking in the chat room. If you want to sit there throughout the course of the day, okay, we'll do no less than 100 setups in a given day. But those are for people that want to be more engaged. Those are the people that are trading NASDAQ futures, or they're trading, SPY options with me. Okay, that stuff takes a little bit more time, a little bit more know-how. But don't get frustrated if you don't see a trade come out for a week and then all of a sudden you see a flurry of 4 or 5 trades. Okay, listen, it's my capital on the line, and I trade when I need to trade out there. So I want to take you through a last couple of things over here, and then of course we'll wrap things up tonight. As I said, it's TheoTrade.com, TheoTrade.com/profit. You can roll for it now. By the way, we are pretty much out, I believe, of riskless spots. Parnell B from New Jersey, okay. Abdul Q from Georgia, Gustavo C from Buenos Aires, Argentina. Apologize, there's exactly one spot. There's one riskless spot left. So we filled up all 30 of those spots tonight. I want to thank everybody for tuning in tonight. Listen, tomorrow morning, as I do, every morning, I kick off the chat room. Come in, say hello, because I'll be in the chat room first thing in the morning. And first thing, if you're on East Coast, 9:22 is when we go live. When I say go live, that's when you start, you'll hear me. Use either Chrome, Firefox browsers are usually the best. And we'll see you in there. Feel free to chat in, though. Say to people, I'm new. What should I expect over here? You're going to get thrown to the deep end of the pool. Tomorrow's going to be a crazy day, as is Thursday. So get ready to rumble inside of this marketplace. I want to thank everybody for joining us tonight. Again, I'm Don Kaufman. Have a wonderful evening. See everybody bright and early in the morning. Bye-bye.